I forgot to do that now, didn't I? Dumb fucking shit. Dumb shit. All right. Ooh, check out his. Mike's here this morning or this evening. Hey, Mikey, what's happening? All right, Silver Fox, Mike, Estrix, Hockey, that right? Hockey, Divvy Dave. What's happening there, Divvy Dave? All right, so let's do this. Are we ready? Okay, it is 9 o'clock, actually 9:06 on the 17th of September. We're in September, right? Brandon, how you doing there, buddy? Brandon's here. Ben, Bobby, Oliver, Jordan. Look, all these people showing up. Split second. Split second. Cool. Aunt Arnie. Arnie, 67. Frank, Clark. Jonathan, Clark Kent. That's funny. Danny, Hockey, how you doing? Drew. Big Barney. Clean up, clean up. Everybody clean up. It's Big Barney. Way to go, Big Barney. Dave. Darlene, how y'all doing? Well, let's get started. It is 9:07 p.m. Tuesday night, the 17th of September. That means we are in week number 12 of the third quarter. Week 12, third quarter. Okay, that would be week number 38 for the year. There's 52 weeks in the year. We are in week number 38. So hypothetically speaking, if you get 1% per week and you started in January, you should be up to at least 38%. Should be. Vivi, how you doing? Colin. Colin, I'm going to ignore you. You keep doing stuff like that, man. Apple user, how are you doing? Lee, nice math. Okay, you like that one? All right, week 38 for the year, week number 12 for the quarter. Let's get rolling, see where we are, see what's going on. Look what happened to Walgreens today. Well, Walgreens has a higher high and a higher low. However, she did close a little bit lower today than she did. Okay, kind of like a doji. She opened up and she closed at the exact same number. Cool beans. But we do have a higher high and we do have a higher low for Walgreens. And I'm good with that. Simone, how are you tonight? Ed, Eric, how you guys doing? Autofield, New York. Cool beans. Snail of Vision. Okay. Jazz, Gecko, Teddy. LLE. I have no idea what that means. LLE. Lily, ooh, there you go, LLE, Lily, Lily. Martin Riley, what's happening? One life to live, cool. All right, so you guys are signing in. Nobody's saying hello. Tiki Talk. Still trying to figure out what you guys are doing over there at Tiki Talk, okay? All right, Paco the Taco, South Shore Farms, South Shore. Jake, what's happening? Noah. All right. So we are in Tuesday. So we have 3 days to go. How did I end up here at 3 a.m.? Well, thank you for showing up. 3 a.m. Where the heck are you if it's 3 a.m.? Because it's only 9 here. So 9 here, 3 a.m. would be 6 hours ahead. That would be... Is that somewhere in England or Midway, somewhere in that area, somewhere between here and there? I don't know. Mickey's a great. Germany. Oh, my German is extremely rusty. Sorry, it's But hello there, how are you doing? So 3 a.m., what does bring you here anyway at 3 a.m.? Now, I'm just showing people how to invest for weekly cash flow for a safe, predictable, consistent 1% per week. That's over 50% per year. If that's appealing to you, hey, welcome to the show. Ask some questions if you like. Now, I'm only doing dividend stock companies here in the U.S. at the moment. Unlike Europe, it's a little bit different. TikTok, Paul, I don't do yield max. Sorry. I only do companies that actually been around for over 20 years. All right, I'm an old dude and I like to have consistency, predictability, and safety. Okay, so I'm not thinking of yield max as a safe bet, at least not for someone in my position. Pranvan, Coyote, oh, what was that? Coyote, 77. DMTLP. I have no idea what that means. All right, so DMTLP looks like you might be in your 40s or 50s based on that picture. I'm in my 60s, dude. Total different world. So you're going to have to break down exactly what that means. Okay, so anyway, thank you for that. So as I was saying to you in Germany, rules here for trading stocks and options are different in the rules for European stocks and European options. It's a little bit different. So I'm not very familiar with European options. You know, I do know that you can't exercise an option until this day. I'm from India. Well, hello. I would love to go to India someday. There's so much about India I find fascinating. Some parts I have no desire to go to. Other parts I do. Bill, should. Bill, I'm not quite sure what should means, other than how it's used in the context of the sentence. Justin's Everyday Trading Limited. Well, Justin, you and I should have a chat, because I'm kind of curious. I'm always interested in what other traders are doing. Now, what I'm doing here is extremely boring as hell. See, I invest in dividend stocks for weekly cash flow, so I can get, you know, a consistent flow for my cash. How would I look for those stocks that have dividends weekly? All right, Philip, I don't know where you got the impression there are companies that pay weekly dividends. No, there aren't. Okay, I use dividend stocks that have weekly options. India is fun if you can deal with smells. Yeah, I can deal with smells. All right, let's start looking at some stocks and move on forward from where we are, because we're just getting started. People just coming in, still saying hi, all that kind of nice, neat, fun stuff. Now, for those of you that are new here, just want to say hi, you know. Ask me any questions you like. Razat, what's up? Not much. Oh, okay, found the monthly ones. Yeah, there are companies that have dividends monthly, and there are companies that have dividends quarterly. There are companies that have dividends biannually, and companies that have dividends once a year. Julie C, what's happening? Ari baby, what's going on? Tim time. It's time for Tim. It's Tim time. All right, anyway, so as I was saying, and funny thing is, I forget what I was saying. I do. I'm interested in the stock market. Cool beans. Well, sit back, relax. I'm going to show you how, when my daughter asked me 15 years ago to teach her how to trade when she was 9, she wanted to know how, you know, she said, Daddy, can you teach me to do what you're doing? So at first I didn't believe her, but after she kept persisting and asking, I need to learn. Okay. So here's the thing. Now, I was in, let me think, 15 years ago. I was 45. Holy cow. All right, so I was 45. She was 9. She said, Daddy, can you teach me to do what you're doing? All right. CRF, Bryce, hold on a second. We'll put that in here right now. CRF. CRF has no option, so that's going to be a no. Sorry, dude. I have a portfolio margin account and need to get more consistent. Been having huge account swings. All right, vintage card deal. Cool. Bryce, I just looked at CFR. CFR is a no. It says it doesn't have any options whatsoever. So as I was going to say, I look at stocks that have consistently increased their profits. Okay, why would you invest your money in a company that's not consistently profitable? So I look at companies' dividends. If you don't know what a dividend is, it's nothing more. CRF, Cornerstone. Okay, CRF. No options. Okay, sorry. IEP was a good one for me. All right, now, I don't like IEP. Okay, now I'm going to explain, Jay. You ready for this, Jay? I'm going to explain to you why I don't like IEP. Okay, yeah, they have weekly options. Great. The premiums really aren't that bad. But what I don't like about IEP Now, I'm heading on over, Jay, I'm heading on over to Yahoo Finance. Now, if you didn't know, this screen here, this screen is live on YouTube. So if you can't see it on your phone, your iPad, your whatever you're using it to view, it is live on YouTube. Okay, so it allows you to look at the small little numbers. So as I'm shooting down here, this is one of the reasons why I don't like IEP. Number one, they've had dividends since 2005. So that's what, 21 years? But let's take a look at the dividends and see if you think they are consistently profitable. Now, when I consider consistently profitable, now, the way it works, if you come up to a good boss, a good boss, all right? You bring in a little bit of money and they say, all right, everybody gets their share. So you have a certain portion going for overhead, a certain portion going for raw materials, a certain portion going for salaries, and then a certain portion going to the investors. Okay, so the math is already figured out. X amount is going here, X amount is going here, X amount is going here, and X amount goes back to the investors. That's the dividends. If the dividend increases every single year, well, logic, reason, and common sense says, well, the company's got to be consistently profitable in order to do that. So let's take a look at the dividends with Icon. In 2005, it was 10 cents. 2006, it was 10 cents. It didn't increase at all. So from 2005 to 2006, there was no increase in profitability. All right, fine. So 2007, they jump up to 15, go to 24 in 2008, 2009, 24, 2010, 24, 2011 goes from 24 to 49, and then they drop it down to 10. Explain to me in a manner which I'll understand, because I never bought the magic bullet theory, okay? I didn't buy the fact that the Twin Towers just fell down, and I didn't buy the what is it, Building 5 fell for no reason whatsoever. Nothing even came close to it, but for some strange reason, she fell. Doesn't make sense. I don't buy the bullshit. Sorry. So if you're going from 24 and you're at 24 for 3 years, no increase whatsoever, well, that doesn't make sense. Okay, fine. So in 2011, it goes from 24 to 49. Well, that's great. But at the end of 2011, it drops down to 10. Well, that's a, wait a minute, 60, that's an 80% decrease. Okay, from 49 to 10. That's an 80% decrease. Okay, so 2011, it's at 10 cents. 2012, 10 cents. 2013 jumps up to $1. Does it really make up for the 4 or 5 years that they didn't increase? No, not really. 2014, 150. 2015, 150. 2016, 150. 2016, 150. 2017, 150. What is that, 4 years of no increasing whatsoever? Why would I trust my money into a company like this? I'm just saying. If I'm going to put my money in a company, I want to make sure they're profitable year after year after year. That's 2014, 2015, 2016, 2017, 2018. Year after year after year, I want consistently increasing in their profits. Or I don't want to invest. Now, we checked a couple of days ago. There's 9,642 different companies that you can invest in any time at all. Why would I invest in one that's not consistently profitable? But wait, we're not done yet. So 2018, it's 175. 2019, $2. 2020, $2. 2021, $2. 2022, $2. 2023, $2. And in 2024, they cut it by 50%. Explain to me how this makes sense to you. Okay? To me, it's a no, and it's a what the hell are you thinking putting your money into something like this? Okay? Just for the fun of it, MSFT, we all heard of Microsoft. Just for the fun, I'm going to go through this really quick. You ready? 2005, 8 cents. 9, 10, 11, 13, 16, 20, 23, 28, 31, 36, 39, 42, 46, 51, 56, 62, 68, 75. Consistently increasing year after year after year. But that's not the only one. I got hundreds of them that don't do that. GPC. Now, GPC, I'm not going to go all the way to the back, all the way down, because it's 70 years. That's 7 decades of increased dividends. Okay, so all the way back to 2000. 28, 29, 30, 31, 34, 37, 39, 40, 41, 45, 50, 54, 58, 62, 66, 72, 76, 79, 82, 90, 95, and a buck. Consistently increasing year after year after year. Why the hell would you put your money into a company that's not consistently profitable? I'm not looking for capital growth. I'm not looking for capital growth. I'm looking for consistent profits on a weekly basis. So I only do companies that are consistently profitable and have weekly options. I also bumped their dividends by 8 cents just recently. Big Pasta! How you doing, brother? All right, let's go back to where we were. So needless to say, IEP is going to be a no. Hey, brother, how are you tonight? Virgil, what's happening? Okay, Intel went up this week. Cool, let's take a look at Intel. Oh, I missed all these questions. Okay. Sean, Intel. We'll take a look at Intel, INTC. I love Intel. I do. What I really like about Intel, look at this drop right here. I love drops like this. Now, people ask me all the time, say, hey, James, what are you holding long term? I don't hold anything long term. Absolutely nothing. Okay, this year, the longest I've ever held anything was 4 months. That's it, 4 months. Last year, it was 9 months. Did I do it on purpose? No, I didn't. I have no desire whatsoever to hold something long term. None. Why? Look what happens. Here's your high, 52. Here's your bottom here, 21. That's like a 50% drop. No thanks. I'll find the bottom. I'll buy it. I'll get my 1%. Great. I'll get my 1%. Great. I'll get my 1%. Great. That's all I'm looking for. 1% a week. That's over 50% a year. If I increase my returns 50% every single year, it's a hell of a lot better than this. Look, 35 to 52, down to 21. Yeah, no thank you. All right, that being said, Intel, here we are. First thing I want to see anytime I look at any stock is, where's the high of the year? Where's the low of the year? Where was it a year ago? Where is it now? And what direction is it currently going? Okay, this is the 1 year chart. It looks kind of interesting. Great. We're currently at 2147. Now, from there, before I look deeper into the chart, I want to go to the numbers. What are the numbers, you ask? Well, what am I buying it for? What strike price am I selling? What am I collecting as a strike price? And is that going to be 1% or more? Because remember, my goal is a safe, predictable, consistent 1% per week. How am I doing that? Well, I'm using weekly options. One of the safest trading strategies there is called a covered call. That's where you buy a stock and you sell a call option against it, a stock option. So yeah, I do stocks and I do options, but I only do one trading strategy here because I consider this as a stair-stepping strategy. It's an introduction. Okay, buy a good company, sell the rights to someone else. If you don't want to do anything else, great, fine. So you get 50% a year. Well, what's wrong with 50% a year? Think about it. What's wrong with doubling your money every 14 months or 15 months? We did the math yesterday. It was like 14.4 months. It's like 14 and a half months to double your money. Oh, great. I'm all for that. All right. So at $21.39, the closest one's going to be the $21.50, and it's going for 50 cents a share. Now, 50 cents a share on a $21 stock is more than 2%. So here's the question. Do you like Intel? Do you like Intel at $21.39? Well, if I can buy it at $21.39, sell the 21.50s and collect 50 cents, great. I can even sell the 21s and pick up 78 cents, or the 20.50s and pick up $1.10. As long as I'm getting 1%, the further up the chain I go, further up the ladder I go, the safer the trade. But also, you see where the line is, where the purple is and the black, the difference between the two? Okay? The purple up here is in the money. These are out of the money. Right here, at this line right here, that's called at the money. Okay? 21.39, well, the 21's here and the 21.50's here, so at the money's right here, right in this little spot. At the money, it's where the highest rate of return is. Okay, you get a lower rate of return going out of the money, but then you get capital appreciation. Here, you have less rate of return, but it's a safer trade. And there's a huge difference between safety and more money. Okay, I would prefer safety over more money any day. Okay, because I'm retired and I have no desire to go back to work. I have no problem going back to work, but I don't want to. Okay, I'll go back to work if I feel like it, not because someone tells me I have to. MDT, is that Medtronic's? MDT. Yep, Medtronics, there we go. All right, so I can't read that name, sorry. I have no idea if that's what that is. It looks like Arabic or whatever. Okay, I can't read it, but MDT, here we go. Here's the high, here's the low, here's where it was, here's where it is, here's the direction it's going. It's currently at 88.63. I can buy it at 88.85. The closest strike price is going to be the 89. The 89 is going for 38 cents. That just doesn't work, but here's the thing. We only got 3 days left, Wednesday, Thursday, Friday. So it doesn't work for this week. So what does it look like for next week? So if this is the price, the 89 for next week is going for 87 to 107, barely 1%. If you like that. Charles, LRCX. Moneyman Myers, nice to see you back again. Jesus, how you doing? Joe, how you doing? Witty. Jarek in Baltimore. Cool beans. All right. LRCX. LRCX. Interesting. $766 a share. LRCX. Okay. Okay, so I only have one minor, Charles, I only have one minor problem with LRCX. Besides the fact I never heard of it, and it's out of my price range, it only has 10 years worth of dividends. But look at the dividends. It goes from 18 to 30 to 45 to 50 to 110 to 115 to 130 to 150, 173 to 2. Well, I mean, they're consistently going up, but there's only 10 years worth of it. I like 20 years. So Charles, it's nice, and if you like 10 years of increased dividends, fine. Me, I like 20 years. All right, so I have 99 questions to go through. So guys, I'm gonna see what I can do here. 99. BKKT. What the heck is BKKT? BKKT. That's gonna be a no. Okay. Monthly options, yeah, no thank you. I don't do monthly options, just not enough. Very intellectual man, why naughty? How are you today? Jonathan, Nolan, C. Boom, Lee Wells, Judy, how are Judy? That dividend screen on Yahoo Finance is only for premium members. how to get that screen. Really? Well, the dividend screen, wait a second. No. Yahoo Finance is free. Okay? Yahoo Finance is free. You don't have to pay for this. Okay? Historical data. You put in any stock symbol, okay? Quote lookup over here, it says quote lookup. Put in any stock symbol you want. Over here on the left-hand side, you come up to historical data. Once you get historical data, you want to look at dividends. Okay, so when you click on this, it says historical prices, dividends only, stock splits, or capital gains. Okay, I won't look at the dividends because I come from a time frame, in the 60s, 70s, and 80s where if it ain't broke, don't fix it. Okay, so this trading strategy works good, so I don't look at anything else. There are a lot of trading strategies out there. There's a lot of things you can do. My niche, what I do is extremely small niche. Extremely. Okay, there's a lot of things you can do to invest your money. What I do here is like 1 in 1,000 people will do. Not a lot, but I want simplicity. I want ease of use. I want predictability. I want consistency, and I want to be able to make a weekly cash flow. And I don't want to spend a lot of time doing it. Mike and Clark Woodfield. Carlos Wynati, 82. I have no idea what 82 means. Kobe, Shelley. All right, vintage card deals. New here, trying to see what the options do. You just buy the stock and sell the call. Yep. Simple as that. Can that sound so simple? You buy a stock, you sell the option. Hello, morning, SG Trending, Sunil. Yeah, okay. How you doing? That was a lot of, I forgot the name. Okay, so anyway. Yeah, so I just buy the call. I buy the stock first. And I make sure it's a good company. But there's a little bit more to it than that, other than just being a good company. Okay? You got to buy it at the right time. AT&T is a great company, but look where the stock is at the moment. It's at the high of the year. Why would I buy it at the high of the year? See, stocks go up, and then they come down. So look way over here, a year ago, back in, September of 23. Okay, late September, she went down, and then she went up, then she went down, then she went up, then she went down, then she went up, down, up, down, up, down, up, down, up, down, up, down, up. That's all stocks do. The idea is Indian market. Oh, okay, I know absolutely nothing about the Indian market. I'm gonna have to apologize for you because I don't even know if I can look at them. And if I did look at it, an Indian stock, I would have no idea how to use that information because I don't know anything about the Indian stock market. And I'm gonna apologize now. You're human. Thank you for that. That was nice. I'm gonna blush. All right, anyway. So why would I buy a company at the high of the year? Okay, I'm not buying high waiting for it to go higher. I don't play that game. Okay, if you take a good look, let's zoom in right to here. Okay, look. She went up, down, and she'd come down again. That's all they do. The idea is when it's at a high here, and then there's profit taking, 2 days the upside, then jump in and ride it up and wait for the profit. Take the profit, say thank you very much, and then move on to the next company because every company goes up and down, up and down, up and down. So I look at 300 companies and that's it. I don't look at more. And the ones I look at have consistently increased their dividends for more than 20 consecutive years, and they have weekly options. Global market, I would love to be able to get to the global market, but I'm just I'm a one-pony show at the moment. So until I can get more people to help me out doing what I'm doing, and then I can branch out and look at a worldwide marketing and the rules and regulations worldwide, we're going to have to be satisfied with just the U.S. market because the U.S. market is the biggest market there is at this moment in time. And it's the only one that I know. Granted, it doesn't take that much to figure out the rest of it, but here's where we are. Okay, sounded like they changed CEO. Okay. Alrighty. Oh, people from all over the place. They start to lose for a reason, probably. Uh-oh, I missed a whole bunch of questions. Okay, here we go. STX, Charles, you like Seagate, STX, Seagate. STX, Seagate, yeah, okay. First thing, as always, high, low, where was it, where is it, what direction? You can get almost anyone from grade school say, hey, what direction is that going? Well, that's going up. It's actually that easy. It was created for a 9-year-old. Okay, my 9-year-old was not a Mensa student. She was just an average, everyday, normal girl. Okay, so the trading strategy had to be simple. It had to be safe, predictable, consistent, and no way for her to lose. That's one always gets everyone. What do you mean no way to lose? It's always a way to lose. Well, yeah, kinda yes, kinda no. The reason why I say kinda yes, kinda no, well, think about it. Stock market's been around for 400 years. Consolidated Edison has been trading for over 200 years. IBM, longer than I've been alive. AT&T, longer than I've been alive. Coca-Cola, Clorox, Colgate-Palmolive, ExxonMobil. All these companies have been around for longer than I have been alive. So when I say no chance of losing, crude oil, okay, I don't do futures. So crude oil, yeah, I used to do futures years ago when I was younger, and I was looking for that big increase, or want to sit in front of my computer for a long period of time. Yeah, I don't want to do that anymore. Okay, let's keep on going. Jeremy Wilson, how are you? Scott, Blake. Oh, Charles, we're still on Seagate, aren't we? Okay, so currently Seagate's at 102.07. The 102, so the 103 is going for 5 cents. Nah, not this week. 103 for next week. Yeah, take a look at that one. So if I was going to buy Seagate, I would look for next week's, not this week's, because we got 3 days left. Think about it. You have 5 days in a week: Monday, Tuesday, Wednesday, Thursday, Friday. Weekly options expire on Friday. Okay, so I want to buy all my shares on Monday or Tuesday, because then I have 5 days of time value. Because as the clock ticks, tick tock, tick tock, tick tock, we're losing time value. Okay, we cannot buy back time. Okay, so as time ticks away, 1 day at a time, see, there's 3 days left for this option before it expires. This option here has 10 days left before it expires. Well, the 103 here is only worth 5 cents because it only has 3 days left. The 103 for next week is $1.50 because it has 10 days left. So yeah, if I'm going to do Seagate, I'm going to do next week's. Okay, but let's take a look at the numbers and see if it's a good deal. First off, the bottom of the year was a year ago, 63.55. The top was just a couple of months ago. Okay, that was 113.73, and that was the end of July. Now, from the end of July's high of the year, well, she dropped here. So it went from 113 to 90. That's a $23 drop. A $23 drop on a $113 stock is almost 20%. You got a 20% drop here. And then she shoots back up, pulls back. Now we're in an uptrend again. Okay, well, how far is this uptrend going to go? Let's look at the last 90 days. Now, the reason why I like the last 90 days is because it gives me a good idea of where it's flowing. Because what did it do last week? Okay, this is what it did last week. What did it do the week before? Okay. So what can we predict for this week? Well, it looks as if it's going to continue running on up. Okay, so I like odds and probabilities. Okay, I want odds and probabilities in my favor. So if 80% of all stock options expire worthless, I don't want to be buying. I want to be selling. So if I buy the stock at the current price, 102, 103, and I sell the current option and I get my 1%, great. That's what I'm looking for. But I only want to buy it if it's in a current uptrend. Okay, number one, never buy something you do not understand or you do not want to hold on to for the long term. Buy it as if you're going to hold on to it for a long time. But if I buy it and it hits my target, great, I have no problem letting it go because I have another stock right behind it waiting to go. As a matter of fact, I have 299 other stocks waiting, ready to go. So I only buy like 5 to 10 positions a week because I have six different accounts. So, this account here only has 6 positions. I have another account that only has 4 positions. And I have one account that has 20 positions. Okay, they all have a different outcome. Like this one here is looking for a safe, predictable, consistent 1% per week. I have other trading strategies that I don't teach here. I'm a nice guy, but I'm not that nice. I mean, I'm giving away this information for free. I'm not holding anything back. Ask me a question, I'll tell you. Well, Charles, want to look at Seagate? Here's Seagate here. This is my interpretation. Is it a recommendation? No, it's not a recommendation. What it is, it's my interpretation. Okay, and I'm spewing facts, not opinions. Do you mess around with mining companies? Okay, Joe, it's an awesome question. I'm going to touch on that in 1 second. Just hold tight. So when I say it's not a recommendation, I'm just reading the numbers. And I'm giving you facts. Because the fact is, the last trade today is 102.07. The fact is, the bid at this current moment in time is 101.10. The fact is, the current ask price at this moment in time is 104.22. These strike prices and these numbers, well, they're all factual at this moment in time. Tomorrow morning at 9:31 a.m., all of this is going to change. Okay? And this, the only thing that's going to change on this would be the very next days. Because all this is all factual. You can pick any one of these days. Here's the high, here's the low, the open, the close, the volume. It's all factual information. Colton Lee, how are you tonight? Okay, so someone asked a question about mining companies. Okay, so before we move on, let's touch on that subject for a second. Now, what you see here is a calendar. Okay, now this calendar represents what I call my old list. Now this is a list that I've been trading and I've been adding and subtracting to. Okay, I'm glad you're doing good, Colton. I've been adding and subtracting from this list for the last 20 years because I've been trading for 20 years. So I like companies, I put them on my list. Now, these little green dots represent the EX dividend date. Now, what is the EX dividend date? Well, there's 4 dates to remember when it comes to dividend stocks. Now, remember, I only invest in dividend stocks. Those are companies that share their profits. Why would I invest in a company that does not share their profits with me? I'm not looking for capital appreciation. I'm looking for cash flow. And there is a huge, huge difference. If you're here and you're under the age of 50, 60, or 70, okay, and you're looking to grow your money quickly, yeah, this ain't it. This is slow, this is boring, this is methodical, this is really boring. It's the same thing, week after week after week. As a matter of fact, I have been live streaming since the beginning of January. The nice thing about YouTube is YouTube keeps all the videos. So you can go back and see all the videos that I've done since the beginning of January up until now. And you will notice I say the exact same things day after day after day after day. Okay? But that's just this year. Virgil, thank you for that. That's just this year. You don't like this, you're going to find this funny. I find it funny every time I look at it. Okay, I'm going to go to my YouTube channel, just for the fun of it. And we're going to go to videos, and then we're going to go to my oldest videos. And this is the very first time I make an appearance in a video.
Hi, I'm JC, and as you being part of my internet website club thingy, which my dad doesn't let me call it that, but I do.
20 days. Okay, there's me. This is 12 years ago. My daughter at this time was now 11, and we've been trading for like 3 years, me and her. So now we've moved up from, pieces of paper and scratch boards to a whiteboard. So I actually went to Home Depot and bought a 4-foot by 8-foot whiteboard, cut it in half so it makes it easier to move around. Okay, so what you're looking at is 4x4 whiteboard, and we actually have notes written down, and we're doing videos. Okay, so as you listen to what I say, January, so 20 days in February, there's over 21 days in the month of March. What does that mean? That means every single day you can buy a different stock, because every single day there's a different company paying out dividends. Yay! Anyway, no, seriously. I'm taking just one company per month. Just one. January, February, March, that's 12. 12.
You can buy 12 different companies for the whole year and still make over 20% a year. That is easy. One trade a month. Who can't do one trade a month? But you want to bump it up a little bit? Let's do 2 trades a month. 20 days. 20 days in the month of January? You can do 2. One every 10 days. Okay, so you get 2 January, 2 February, 2 March, blah, 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 24 for the whole year. And if you get at least 2%, that's close to 50% a year. 50% per year. That's cool.
Okay, so I was talking about getting 50% per year 12 years ago. Now, I can go back and look at videos from all the way from 2012, 2013, 14, 15. Anyway, it hasn't been, and since this year, was that from a long time ago? Colton, that was 12 years ago. Okay, let me go back here. Okay, my daughter at the time was like at my shoulders. Now, she's taller than me. Okay, she's 25 now. Here is where she's 11. Okay, she first started when she was 9. Okay, she first got on my lap, say, Daddy, can you teach me to do what you're doing? Okay, great. So we came up with a trading strategy. Simple, safe, predictable, consistent, no way to lose. Okay, fine. She was averaging 5% per month at 9 years old. Now at 11, she bumped it up a little bit, but that's besides the point. I just wanted to show you that you'll find any videos you see me doing, I'm saying the exact same things over and over and over again. I consider this as a stair-stepping strategy. It's a great way to start. It's simple, it's safe, it's predictable, it's consistent, no way to lose, and if you do it right, you can get 50% a year or more. Now, you could, because at 1% a week, that's over 52% a year. Compounded, it's 62% a year. Okay, if you compound it, you can double your money every 14 and a half months. Well, that's freaking insane. But it is what it is. You do have to do some work. It does take me 5 or 10 minutes every morning. Okay, 5 or 10 minutes. So great. I can do it while I'm eating my breakfast. Respect for a father teaching the kids good life, good future. Thank you very much, Joe. Granted, I wish it stuck because she's 25 now. She doesn't trade. She works with dogs. She washes dogs. And she loves dogs. And she's happy. Great. She's happy. That's wonderful. All right. So anyway, as I was saying, all these. So I'm going to answer your question about the mining company. You asked, do I do in mining companies? Well, yesterday, or a couple of days ago, we looked. Hey, we looked a couple of days ago. There's 9,642 companies you can invest in at any point in time. That's a lot, 9,600 companies. Okay, yeah, they have mining companies, they have oil companies, you have, I wish I had used it. Nah, no you don't. I was really strict. I was. Anyway, okay, me and the wife would have arguments every once in a while about how strict I was. It got to a certain point where it's like, all right, you gotta leave. So she would get in the car and she would leave. And every one of the kids, I had 3 kids, they all knew shit was gonna hit the fan because Mama didn't like it when Daddy disciplined the kids. But she knew. Well, I'm sorry you didn't have one. I didn't have one either. My father wasn't around. But my kids knew that if Mama was around, they could get away with it. But when it was just Dad, nope. Dad laid down the law and they had to do what they were told. So Mama would leave and I would do the disciplining. And I would send her, I'd call her because we had mobile phones back then. Yeah, we had, the expensive ones that you had, bolted to the floor of the car. But I'd call her up and say, all right, safe to come home. But yeah, okay, she was an awesome woman. I have great kids. Okay, whatever she did a wonderful job. I'm sorry to hear that. Really, I am. My brother died, and my brother, believe it or not, my father had 13 kids. 13. The youngest one is not supposed to die first. It's just not supposed to work that way. Anyway, my younger brother died first, and he had 3 kids. One was in elementary school. 2 of them were in high school. And yeah, both Mom and Dad died. So it was terrible. So I feel sorry for you. So as I was saying, 9,642 different companies. I take out the companies that are consistently profitable, 20 years or more of increased dividends. Okay? Dividends are a portion of the profits. If the profits are increasing, the dividends are increasing. It's actually that simple. Don't make it more complicated. Yeah, don't make it more complicated than it needs to be. If the company is profitable, the dividends are going to increase. So if the dividends increase for 20 consecutive years, well, that company knows what they're doing. That's where I want to put my money. So out of the 9,642 companies, I only came up with 300. And they're all in my calendar. Okay, so you have these little green dots, and they represents the EX dividend date. Okay, the EX dividend date is the last day the stock trades before the dividend is paid out. So if I want to collect a dividend, I've got to buy it before the little green dot shows up. All right, now, as you see, Bristol Myers Squibb, JP Morgan, NTAP, and Cisco. 4 companies have their dividends right here. Does it say what the company does? Does it say that Bristol Myers Squibb does consumer products? No, it doesn't say that at all. Does it say JP Morgan does finance and money? No, it doesn't say that at all. Doesn't say what NTAP does, and it doesn't say what Cisco does. Look it up here. Devon Energy, well, that's an oil stock. Coca-Cola, well, that's consumer goods. Macy's, consumer goods. Nova, I believe that's Nova, N-O-V. And WMB, I have no idea what those do. But I don't categorize my stocks by what industry they're in. I categorize all my stocks by when they pay their dividend. And the reason for that is because just before the dividend, the stock has a tendency to go up in value. So if I'm looking to scalp my 1%, I'm looking to buy the dividend stock before the dividend, specifically 2 weeks before the dividend. So 2 weeks before the dividend on a Monday. So if I like Cisco or Bristol Myers Squibb, I'm going to buy it on the 16th. I'm going to buy it at the open, at the market, and then I'm going to sell the closest covered call there is to it. The more I hear what you're saying, the more I think this is exactly how my grandfather retired. Uh-oh, I gotta see that. Sounded interesting. Retired off his slow but steady stocks in Coca-Cola at McDonald's during the 70s. Oh, could very well be. Okay, we're gonna touch on that in a second, hold on. So, if I wanted to collect a dividend, or buy the stock and collect the run-up, because it's called a run-up, because when the dividend is here and I buy it on the 16th, well, I'm giving it almost 3 weeks for it to increase in value and me to collect my 1%. Because if I do it here on the 16th, I'm going to buy it at the opening price. I'm going to sell the closest strike price or covered call to it. So if I'm buying it here on Monday at $100, I'm going to sell somebody the rights to buy it from me at $100, exactly what I paid for it. So what am I collecting? I'm collecting what is called the premium or the bid. And if that's more than 1%, well, there's my 1% per week. So let's go back to here. Okay, so if I buy it on Monday, collect my 1% on Monday, and let's say Friday comes, and now the stock's at 101, well, then I'm back into cash the following Monday, and I can pick another stock. Have no fear, there's another one the following week. Okay, there always is. Okay, so if it's at 99.99 and I miss the 100, well, I keep about 1% I collected, and I take the stock, and I do it again on the 23rd for the second week, and I collect another 1%. Great, well, I collect 1% here, and now I'm going to collect 1% here. Now Friday, when the option expires, if it's over 100, I'm back into cash on the 30th, and I do it again with another stock. But if it's still at 99.99 on the 27th, well, great. I got 1% here, 1% here. Now, on the 30th, I do it again and collect another 1%. But here's the thing. At the end of this week, okay, I got 1% here for this week, 1% here for this week, 1% here for this week, and now I get to collect the dividend. Because if we're looking at Bristol Myers Squibb on the 4th of October, I'm buying it here. I'm collecting my 1% for this week, I'm collecting my 1% for this week, I'm collecting my 1% for this week, and I'm collecting the dividend. But now, do I want to collect all those in the dividend? No, I don't. I want to collect just the 1%, be back into cash, and find something else. Okay, so there's 4 dates to remember. We're at 58, okay? If we drop a little bit lower, we're going to reboot, okay? Just saying that. Now, what was I saying? Oh, so as you can see, all the little dots, there's 4 dates to remember when it comes to dividend stocks. Okay, date number 1 is the announcement date. That's when the corporation says, ladies and gentlemen, have I got news for you? We're having a dividend and we're paying it on this date. That's the announcement date. Date number 2 is the EX dividend date. That's the last day the stock trades before the dividend is paid out. That's the little green dot. Okay? Date number 3 is the date of record. Now, just so you know, whoever owns the stock on the date of record is entitled to the dividend. It's that simple. If you own the stock on the date of record, you get the dividend. Date number 4, payment date. Self-explanatory, that's when you get your money. So, long story short, I don't separate my stocks by industries. I separate them by the calendar. It's a long explanation, but I separate them by the calendar, not by the industry. Okay, I really don't care what they do. I only care that they're consistently profitable and they have weekly options. I mean, think about it. Consistently profitable and weekly options. Can you teach me that? Yeah. At the cross scripture. Okay, so let's keep on going with some of these questions. But in short term, don't you get hit with taxes? Lose. Is that lose, Asso? Lou? Taxes? Good question. Now, taxes, you really, 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 really need to consult a tax strategist or a tax planner. Okay, so if you are paying personal income tax, you got to pay tax. Okay, now I said if we drop below 55, we're going to reboot. So let's do this. So for you guys that are here right now, just sit tight. We reboot. I'll be back in about a couple of seconds. Reboot. Wow, come on.
But what he's about to discuss.
Sorry, you guys over on YouTube. I'm just rebooting on TikTok. Anytime I drop below 60, I like to reboot. That way it gets more people into the audience. All right, so STX, we're done with STX. Everything looks good. The movement looks good. The numbers look good. All right, so let's jump in and take a look at some other stocks that we're thinking about, something we have up for consideration. Well, Dollar General is one of my favorites. I love Dollar General. Power of Publish. I would like to invite you to come along. I would. Okay, so let's do this thing. All right, so we rebooted. The only reason why I reboot is to get more people here, because after a certain time, if it drops below a certain level, let's just reboot and you just get more eyes. Okay. I'm definitely not doing this for myself. I'm doing this for my grandchildren. Eventually, when they take over the company and I'm long gone, they can at least say, hey, that's Grandpa. Because believe it or not, somebody made me a grandfather. Who would be irresponsible enough to make me a grandfather? You guys don't know me well enough. I'm a big child. I am. I have no idea what I want to do when I grow up. All right, so anyway, next stock we're going to look at is Dollar General. Dollar General has been on our radar for quite a while. And again, one of those companies that made a big drop recently. I love big drops because we're going to make most of our money in the stock market buying low and selling high. Okay, great. I don't like holding on to anything because look what happens. It goes up and then it comes back down again. Okay, I'm smiling, now I'm frowning. Yeah, no thank you. Yeah, me too. You like that, Virgil? Okay, so let's take a gander at Dollar General. Here's our high at 168. Here's our bottom here at 78. That's a $90 difference. How would you feel if your stock went from 170 all the way down to 78? It just makes me cringe. All right, anyway. A year ago, we're at, was that 115? Now we're currently at 86. Okay, I like this drop right here. At 86 at this moment, I could buy it at 86.33. The 86 is going for 124. That's well over 1%, and that's still 3 days. Okay? So 3 days, I can still get 1%. Okay? I can even do the 85s next week or the 84s next week and get $3. That's still over 1%. My objective is a safe, predictable, consistent 1% per week. And Dollar General, it's not a company we've never heard of. There's hundreds and hundreds and hundreds of Dollar Generals all over the place. So anyway, let's take a look at the actual numbers. The last 30 days. The reason why I like the last 30 days, it gives me a good idea where I think it's going to be in the next couple of days. Well, because the next couple of days is Friday. Options expire on Friday. And if I can buy the stock first thing tomorrow morning at this price, sell a covered call at this price, collect this premium right here, that's over 1%. The safest trading strategy there is a covered call. Okay, where you buy the stock, you sell somebody the rights to buy it from you for the same price you paid for it. It seems kind of silly because I'm buying it for $100, I'm selling it for $100, and I'm only collecting $1. Well, it's a safe strategy in that $1 off of a $100 trade, well, that's 1%. And if I do 1% every single week, great, it takes me 5 or 10 minutes, that's it. Okay, you know what? Let's do one just to see how it looks. Let me finish up with Dollar General first. Okay, so currently Dollar General is here. Here's our 30-day bottom here. Okay, so we have 2 weeks of, and it's a very slow, steady pace. I have no problem whatsoever, a slow, steady pace to the upside. Because I'm not looking for a huge amount. I'm looking for cash flow. I'm 60 years old. I don't want to go back to work. I don't have the opportunity of putting money into a company and waiting 5 or 10 years for it to go up. No, I need cash flow now. Remember what J.G. Wentworth? It's my money. I need cash now. I would sing it for you, but I can't quite remember how it goes. Anyway, hello. When you buy stocks, do you have to buy or select the covered call option? Thank you. Use your 221682. Let's go over a couple and I'll actually show you a trade or two. Now, we're going to use Dollar General as an example. Okay? So, Dollar General at this moment in time is 86, so I like it at 86. So, what I'm going to do is I'm going to do a trade right here, right now, as you see how quick it is, on Dollar General at $82. Okay, so let's get rid of this because we don't need it. Next thing I want to do, now, Think or Swim, which is this trading platform, which is the one that I like. If you have long-term payments and you need cash now, no, that's not how it goes. I'll think of it. It'll come to me in a minute. Okay, so one of the things I like about Think or Swim, it has everything that I want at my fingertips. So what I'm going to do is I'm going to change this right here from single options to covered calls. Right there, covered stock. Now, remember I said I like the 86s. Okay, so let's take a look at what the 86s look like. So here's the strike prices over here, 82, 83, 84, 85, 86. 86 is the one I want. So I'm looking at the 86, and it's right here. All right, so I can buy at 85.09. Okay, this pops up. Now, automatically, I have mine set for 1,000 shares. Okay, so I buy 1,000 shares, I sell 10 contracts. Now, you can change it. So just so I don't scare anyone off, let's change it to 300 shares. Okay, 300, that's not that much. Okay, so next what I want to do is I want to read it and see what it says. So I'm going to buy 300 shares of Dollar General. Then I'm going to sell 3 contracts because each contract, one contract equals to 100 shares. So 300 shares, 3 contracts. So 3 contracts at the 86. Remember I said I like the 86? Okay, and here's the current price, limit order, blah, blah, blah. Next thing I want to do is I want to take a look at the actual order. So I hit confirm and send. Here is the actual order. Now, when you get the actual order, I encourage people to read it out loud because one of the biggest obstacles new traders are going to find is hitting the wrong button. It is so silly And it is so unbelievably silly, it's hard to comprehend sometimes. Now, I did it 4 times this year. 4 times this year. I've been trading 20 years. 4 times this year, I hit the wrong button. Sorry, it is what it is. And I'm not perfect. All right, so here's the trade right here. Buy 3 covered DG, Dollar General 100. 100 means it's a weekly. Okay, it means it expires every week. 20 September 24. Well, that's this Friday. That's 3 days away. The $86 call, remember we already talked about the 86, I like it at 86. Dollar General at 84.73, limit order to open to open. So why does it say to open to open? This trade right here is a double trade. You're opening a stock trade, I'm buying the shares. I'm opening an option trade, I'm selling the covered call. Together as one. So the covered call, so the option and the stock purchase are combined together. Now, what's next? Well, next is the break even. The break even is 84.73. Well, isn't the stock at 86.33 at the moment? If the 86.33 is the current purchase price, well, my break even is 84.73. That means anything over 84.73 is going to be a profit. 83.74, 83.75, those are all profit, but those are all lower than the current price. So if the stock goes up, great. Stock stays the same, great. The stock can even come down and I'm still making money. So stocks only go 3 ways. It goes up, it goes down, or it goes nowhere, sideways. I hate it when they say sideways because stocks don't go sideways. They go up, they go down. Okay? So, next. Remember I said I want simple, safe, predictable, and consistent? Well, here, I already know I'm going to profit. I already know what my profit is. My profit is 381 for the 300 shares, 381. To the maximum loss, which is what it's costing me for the trade, 25,000. Okay, so let's bring up the calculator to find out exactly what kind of a rate of return that is for the week. Now remember, it's for the week, but once you buy the stock, you own the stock, and it will always be yours until you sell it. Now what we're doing here is we're buying it because we like it. I'm selling it. I'm selling the covered call against it because I want to get a profit. Okay, so if it sells, great. I'll just buy another one next week. It's actually that easy. But if I don't sell it, well, I'll sell a covered call next week. If it doesn't sell that, I'll sell another covered call. And then I'll sell another. See, I had, hold on a second, Kimberly Clark, KMB, last year, nine months I had Kimberly Clark. I collected 3 dividends and like 20-something premiums. It was nice. Okay, I bought it. It went down, went sideways, came back up, and then I sold it. Okay, number 1, never buy something you don't want to hold on to long term. Never sell at a loss. Make sure the company's consistently profitable. Make sure it has weekly options, and then make sure the numbers work. Numbers, well, we want to know what we're making. Okay, so let's get rid of this. Maximum profit, 381. Okay, and what is this trade costing me? To find out what your rate of return is, you take your profit, 381, and you divide it by your investment. Now remember, if the stock stays above the 86 by Friday, I get all that money back. And I get this money right away. So 381 is the profit, and it's costing me $25,420 to make that trade. That is a 1.5%. See, 1.4988. That's 1.5% for 3 days. Now, you can ask yourself the question, 1, does it make sense? Okay, Dollar General, is it a good company? Well, it's been around for a while. Okay? Is it going anywhere? Do you really think Dollar General is going to roll up, shiver up, and disappear? No, it's not. Okay? It's going to be around. Now, if $25,000 is scaring you, fine. Well, let's change it. Let's change it and let's buy just 100 shares. Okay? So at 100 shares, we're making 127. All the numbers are still the same. Okay, here's the break even, the exact same. But my profit is less, 127, but I'm not dishing out them, 8,400. So let's take the calculator again, clear that. We take 127 off of 100 shares. And then we divide it by the purchase price, 8,473 for 100 shares of Dollar General, and that comes to, oh, look at that, the exact same amount of money, 14988. Well, that's 1.5%. See, the amount of shares is irrelevant. Whether you buy 100 shares or whether you buy 1,000, the rate of return is the exact same. So at 100 shares, it's 1.5%. 300 shares, it's 1.5%. So let's clear this out, and let's do 1,000 shares, just for the fun of it. So 1,000 shares, okay, now I'm getting $1,270. All right, so $1,270 is my profit. And what's it costing me? Well, now it's costing me $84,736. Well, what is that rate of return? Oh, look at that, the exact same rate of return. So when people say, hey, I made 5,000, hey, I made 10,000, yeah, I really don't care about the amount you made. How much did you profit? Rate of return. So if you made $5,000 this week, good, great. What did you start with? If you started with 5 million and you only made 5,000, I'm not impressed. Okay, that's not impressive. That's like 0.1%. That's not impressive at all. But 2 and 3% per week consistently. Now remember, this only takes me 5 or 10 minutes a day. So let's do a couple really quick, and I'll do very minimal talking so you can see how quick it actually is, because it's really not difficult. Okay, so adults have a tendency to complicate things and make it more difficult. So I'm going to show you really quick how I do it. Right, first and foremost, it's always, let's get rid of that. Let's get rid of that. Let's get rid of this. Go back to here. So I want to set things back up to ground zero. Here we are. And I want to go here. All right, so we're going to blow through a bunch of them, and I'll show you how quick and easy it is, because it's really not difficult. Now, if you got a pencil, piece of paper, you might want to write this down, because step number 1 is one of the most important ones. Step number 1 is finding a good company. Now, here's how I find my good companies. Google Dividend Kings List 2024. 54 companies that have increased their dividends for 5 decades. Dividend Kings List, Dividend Aristocrats List 2024. 67 companies that have increased their dividends for 25 consecutive years. Dividend Champions List 2024. 150 companies that have increased their dividends for more than 25 consecutive years, but have less rules than the Dividend Aristocrats. Dividend Aristocrats have certain rules that the champions don't. Dividend Contenders List 2024. 300 companies that have increased their dividends for 10 to 24 consecutive years. And then we always cheat with Warren Buffett's list 2024, because if it's good enough for Warren, it's good enough for me. Now, I haven't met another trader that I'm willing to copy off of. I don't do the Pelosi thing. She's a cheater, and I just don't. She makes my flesh crawl every time I think of her, okay? I hate hypocrites, really do. Okay. If you have long-term payments, you just need cash now. And you need cash now. All right. You are basically doing what is called buy right, buying the stock, selling the covered call. Yep. Knowledgeable investor. That's exactly what it's called. Simultaneously. Yep. What stocks are we watching? All right. I'm going to show you a bunch of them in a couple of seconds. Dollar General, blah, blah, blah. The 86 strike price you picked for Friday, blah, blah, blah. At the money point. 51 delta, lovely. I don't do the deltas because, all right, knowledgeable investor. Okay, I'm going to agree with you 100%. Okay, however, okay, you got to remember this part. However, it was created for a 9-year-old. I did not do the Black-Scholes pricing methodology for options. Nope, didn't do that. I didn't cover implied volatility. I didn't cover deltas. I didn't cover Vega. I didn't call it theta decay. No, I didn't do any of that stuff. Simple, easy, predictable. Don't make it more complicated than it needs to be. I'm going to show you how quick and easy it actually can be. Okay? And no, I don't even look at the Greeks for this strategy. Now, I have other strategies where I do look at the Greeks because they are important in different strategies. But this strategy, it's not. So, rule number 1, pick a good set of stocks. Throw them into your calendar. Your calendar will tell you when they pop up, when they're going to pay their dividend. So I like to do 2 weeks before the dividend date because stocks have a tendency to go up just before the dividend's paid. All right, so let's take a look at this week right here, the week of the 23rd, the week of the 17th, all right, right here, this week right here. Okay, so what do we have available on this week? Well, we have AIG, HCA, SES, HES, MO, which is Altria, MK, which is Merck, UNH, PHM, and BBY. Okay, so if you want, thank you, Virgil. Okay, so if you want, set a timer. Okay, we're going to say go and see how long it takes me to go through all of these 8 stocks. Ready? First on the list, AIG. AIG. High, low, where was it? Where is it? Perfect spacing, great. Current price, 74.35. The 74s are going for 35. Not this week. Next week, 95. Great. Okay, high, low, blah, blah, blah. Last 90 days. Okay, cool beans. Last 30 days. High, low, to upside. Great. Seasonality, what does she normally do? This time of year, to downside, okay. All right, great. So I like that one. Let's go here. AIG, I like it at 74. 74, there we go. No, not that one. I want next week 74. There we go. Next week 74,000 shares. Okay, buy 10 covered, blah, 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 to open, 1,400, 74,000. Okay, send, confirm, and send. Okay, great. Well, that's one. That's a good one. Cool. Next one. HCA. HCA. Okay, high of the year, no thank you. Next one, HES. HES. Ooh, I like that. Check that out. Let's go backwards for a second. High, low is the direction. Great. Currently at 133.50. The 130s are going for 165. Next week's 131s. Cool. $2. Great. I like 131 for next week. All right, 131 for next week. All right, the high's here, 168. The bottom's down here. She's bouncing off last 30 days. Okay, 30 days. She goes up. Here's the high. Here's the bottom. 4 days to the upside. Awesome. I like it. The 131s. The 131s. Not this week. I want to do next week's 131s. There we go. All right. Click it there. 2,500. That's my profit. 25.60 is my profit. Divide that by my purchase price, 128,446. Comes to a grand total of 1.99%. Oh, love that one. Okay, so I like Hess. That one works. Get out of there. Okay, so that's 2 good ones so far. Next, MO, Altria. MO, Altria. All right, so Altria is going to be a no. Here's the high right here. It's in a downturn right there. Altria will probably look good sometime next week as soon as it finds its bottom. So we're going to move on. Next one, Merck, MRK. MRK. High, low, where was it? Where is it? What direction is it going? The last 30 days. The 16th. Yep. Up, down, up. Yep, it's running out of steam here, so I'm going to pass on this one. It doesn't make any sense because it already made its profit. It would have been great last week, but not this week. Next, UNH. UNH, University of New Hampshire. Okay, why is it not coming in there? UNH. Okay, again, number 1's out of my price range. Number 2, it's coming down off of a high. It's going to come down to here before she turns around. That's going to be a no. PHM. PHM. Absolutely not. It's at the high of the year. Maybe I'll take a look at it in another couple of weeks. BBY. BBY. Try it again. BBY. Yeah. That one's going to be a no also. Look at the chart. Got this big jump up here. There's your high, bottom, up. Yeah, too close here. And you have this down here. And look at all the space within the last 30 days. Yeah, no thank you. All right, so I just went through 8 stocks in less than 5 minutes. Okay, number one, they're already on my calendar, which means I already like them. It's never a question of do I like this stock or not. Because if it's on my calendar, it's a yes. That's it. Once you choose a stock, so yeah, I'd like to get that one. Great. Now put it in your calendar. You're going to look at it 4 times a year. That's it. Okay, so here is Seagate right here. I'm only looking at Seagate 4 times a year. That's it. Okay, so next week, I'm not looking at Seagate. The week after, I'm not looking at Seagate. I'm not going to look at Seagate for another 90 days because Seagate pays its dividend every 90 days. And just before the dividend, the stock goes up. So if I know when the stock's going up, I jump in. I do one of the safest trading strategies there is, a covered call. Buy the stock, sell the option. Worst case scenario, I get a stock that continuously increases its dividends every single year. Worst case scenario. Can I live with it? Yes, I can. But it has weekly options, so I can sell an option against it every single week. Do you remember my cow analogy? If I buy a company, okay, if I buy a cow and it gives me a gallon a week, great, I'm happy. But what happens when it gives me a quart or a pint? Do I get rid of it? No. If I get rid of it, I got nothing to drink. But if I'm only getting a quart, maybe I'll mix it with a little bit of water and, and deal with it. But it's something. Something is better than nothing. And that's what a lot of people have a hard time grasping. All right. What are your favorite dividend stocks specifically? Rico Vico. Okay. So far this year, it's Macy's, Nordstrom's, Kohl's, Walgreens. Okay, Brian, he's just trying to profit off the premium doing that. I do that sometimes. Knowledgeable investor, cool. I bought shares of BITX and wrote covered calls immediately right after at the money for this Friday. What the heck is BITX? Now, if I say that, basically, it's not on my list. Oh, the Bitcoin thing. Yeah, no options. Why the hell would you do that one? Why would you do a 2x Bitcoin strategy? Okay. Interesting. 26. It's definitely bouncing up. It's at 26.31. The 27s are going for 80 cents. Nice. I like it. But it has no dividends. So it's not something I would do. But take a look. If you think it's going to hit 27, the 27s are going for 80 cents. Okay, that's more than 2.5%. If you like BITX. I've never heard of it. But it is what it is. My shares should be called away by this Friday. Yep, they should, hypothetically. How much did the average person make with your service? The average person makes over 1%. Bum, 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 bum. Any reviews about Camtech, C-A-M-T? Okay. Ooh, Anton wants to look at Carnival Cruise Line. We'll look at that in a second. But C-A-M-T, I've never heard of it, and it's going to be a no. Who that one? I can't read that name. Sorry about that. I can't read the name. But Camtex, it's a monthly. Monthly options just don't work for me. How much would I have to invest to actually see some results? $5. You can actually see results with $5. Okay, you're looking for. It all depends on what you're looking for. Okay, you're not going to retire on $5. You're not even going to retire on 500. You might retire with 50,000, or 75,000, or 100,000. But you got to come up with an amount of money that's going to actually make a difference in your life. Think of it this way: at this moment in time, most people are trading their time for money. All right. Now, when I first started, I didn't have a large enough amount of money that I could retire with. Okay, so I had to build it over the years. I'm at the point now where I have enough where 1% a week satisfies all my bills. Now, at some point in time, when you reach retirement age, now there's 3 different retirement ages, or 3 different, hold on a second. Key date, no. Moment of enlightenment, no, that's not it either. Fact, no, that's not it either. Anyway, 3 ways people are going to retire. Number 1, okay, you're going to age out. Okay, when you come to retirement, you're going to age out, which means you're too old to work. Everybody knows you retire at 72, 68, 55, whatever it is in your country or where you are. All right, age out means you're too old to go back to work. 2, walk out. Walk out is basically, hey, I have enough money, I don't need the bullshit anymore, I'm going to retire. Well, that's me. 60 years old, I had enough where I have enough coming in on a weekly basis, I don't need any more. That's where I am. Number 3, this is not a good one, okay? Toe tag out. What does that mean? The only way you're quitting working is you age out, you walk out, or you toe tagged out. That means you die on the job. There are a lot of people that do that, work until the day they die. Not me. I did not want to go down that route. I understand. I use your method all the time, and I sell puts too. Knowledgeable investor, that's an awesome strategy. I love selling puts, but I don't teach it here. Because here on this channel, it is a simple, easy, predictable strategy. Dang! Did you like that one? So ask yourself a question. Okay, when it comes time for you to retire, door number 1, Johnny, tell him what he's won. Door number 2, or door number 3. All right, so keep it simple. Your way is easy for new option sellers. You're absolutely right. Simple, easy, predictable, consistent. Once you get this down pat, move on to other things. There are other trading strategies that are easy that you'd add to it. Okay, selling cash secured puts. It's simple, it's easy, but it's not as safe as this one. Okay? This one is simple, safe, predictable, and easy. You know what your profit's going to be going in. You never buy something you do not like or you do not understand. I may keep it simple. All right. Keep on going with questions. Here we go. I'm watching you on the big screen in my living room. Woohoo! That's what I tell people. Grab some popcorn, soda, beer, whatever you desire. Some cognac, a cigar, smoking pipe, whatever. Sit, chill, look at the numbers on your big screen. I love a big screen. I got a big screen right over my bed. It's awesome. No taxes on overtime. I love that. Your feet stink. Thank you. Hey, MoFish, Uber. Uber has not been around for over 20 years. Now, MoFish, when I say, if you want to invest in Uber, hey, more power to you. When I say I only invest in money in companies that I know are consistently profitable and can prove that they're consistently profitable with 20 years of increased dividends. 20 years of increased dividends are 20 years of increased profits to the company and to the investors. Okay, there's over 300 companies that fall in that category. Uber is not one of them. Okay? All right, Jared, I agree with you. I love it. Trump came up with the idea, no taxes on overtime pay. That's freaking awesome. Low gasoline prices, yeah, that's awesome too. However, I don't want to do politics here. Most people do not like my politics. Joey, JEPQ. I don't want to make you feel bad, Joey, but hell no. Let me explain why JEPQ is a no. For me, JEPQ. You may like JEPQ. You might. And a lot of young people buy that crap because they don't want to take accountability for their own time and their own action. They want to pass the buck to someone else. Here's all my money. You do it. That's exactly what you're doing, Joey. Here's my money. You do it. Let me explain. JEPQ is a monthly. Number 1, that's a no. I don't like monthlies. The numbers just don't work. Look at these numbers that I'm collecting. 54.93. The 54s are going for 10 cents a share. Yeah, no thank you. Okay? The next option out, the 54s are going for 35 cents. That's not even 1%. And I have to divide it up by 5 weeks? Yeah, no thank you. The numbers just don't work. I'm on the train. Virgil, way to go on the train, dude. Where are you heading? Curiosity. Where are you and where are you going? I'm just curious. If you actually, Virgil, if you go into my TikTok stream and you look at some of my videos from years ago, yeah, you'll see me all over the place. I was up in the mountains trading. I'm in the valleys trading. I'm on the beach trading. I'm freaking everywhere. I'm in my van parked on the side of the road trading and publishing. Yeah. Okay. So anyway, JEPQ. Let me finish off with JEPQ. Now, before we go any further, number one, it doesn't work. Okay. Now, at the current price, the 54 is going for 35 cents. That's not 1%, and I have to divide that by 5 because it's 5 weeks before it expires. Why don't you buy Bear? What the heck is Bear? If I've never heard of it, it's going to be a no. So let me finish up with JEPQ because I'm not quite there yet, and most people buy shit that they have no idea what the hell it is. So let's take a look at JEPQ, and let's take a look at some historical data on JEPQ. Well, first of all, here's the dividends. Okay, number one, JEPQ first started paying dividends in 2022. That's only 2 years. Okay, so you're going to put your company you're going to put your money into a company that's only 2 years old. Explain to me where the safety is there. I like 20 years of increased dividends. AT&T is over 100 years old. Coca-Cola is over 140 years old. Walgreens, 170 years old. Yeah, okay. This is 2 years. Yeah, no thank you. That's one thing. Summary. Okay, so hold on a second. All right. Summary, JEPQ has a yield of 9.2% per year. Okay? So you're investing in a company that pays 9% per year. That's it. Now, some people might think that's good. Is that TV a Samsung? Yeah, actually it is a Samsung. Imagine that. So, 9% per year. Look at year-to-date total returns, 14.84. We are currently in week number 38. Week number 38. Now, just for the fun of it, okay, here's my account right here. Okay, we're currently in week 38. This account, 46%. This account, 69%. This account, 9%. Well, this account's only 2 months old. So that's, 5%, almost 5% a month on this account. But look at this, 69%, 46%, and we're only in week number 38. Okay, JEPQI, okay, that piece of crap that you like, it's up 14% for the year, but it only has a 9% yield. That means you're getting $9 out of every 100 you put in. I'm getting $50 for every 100 I put in. Explain to me why you like that in a manner which I'll understand. Okay, Ryan, we already looked at AEP earlier today. The numbers are absolutely horrible. You picked up Bank of America at $39.50. Tom Pal, how are you today? Nice to see you back again. Bank of America, huh? BAC at, what was it, $39.50? We're currently at $39.55. Okay, cool. Okay, so let's take a look at Bank of America for the fun of it. Tom Pal jumped into it today. We were talking about it yesterday and the day before. Here's the high, here's the low, here's where it was, here's where it is, here's the direction it's currently going. $39.58. The 39.50s are going for 48 cents, over 1%. That works, and that's just 3 days left. But if I wanted to go to next week, next week's 40s are going for 50 cents, which is over 1%. That works for me. Okay, so Mo, why not buy Bear? What the heck is Bear? B-E-A-R. Bear Vermont Teddy. Are you shitting me, really? There's no options. That's why. How's that one? Oh, Bear Aspirin. Well, he said Bear, B-E-A-R. I put it in here. B-E-A-R, Vermont Teddy Bear Incorporated. He's giving me the wrong ticker symbol. Should I invest in HELOC? Yeah. Wait a second. Let me get that question again. All right. Hound Dog. Should I invest with a HELOC money at 7% interest rate? Well, Hound Dog. Cancel that. What I'm going to tell you, all right, number one, I don't know anything about you, so I cannot give you any information whatsoever what you should and shouldn't do with your money. Okay, but I tell you what, if I had the opportunity, I would borrow as much money as I possibly could from anyone who would lend me money, and I do. It's spelled BA. Okay, yeah, I get that, but I still need the ticker symbol. Okay, so I can't tell you to do that, but that's what I do. I mortgage the hilt. I mortgage my house to the hilt, because here's the funny thing about homes that a lot of people don't think of. A lot of people want to. My sister has her house paid off, and I keep saying that's the stupidest thing anyone can do, because what you're doing is you're taking your savings account and you're putting it into your house. Because when you retire, you have all this equity in your house. Great, you're not paying anything on a mortgage. Well, you're still paying on your house. You have maintenance, you have insurance, and you have, there's another one, taxes. There's no possible way anyone can be debt-free on a home. None. So if you're going to be paying on a house, this is what I try to tell my sister, why don't you leverage the house as high as you possibly can, which at this moment I believe is 90%. So you take out as much equity as you can, 90%. Now, 90%, considering it is your primary residence, well, the 100% of the interest on that loan is tax deductible. Okay, great. However, like you said, you're borrowing it at 7%. Great. You're making 50%. Wonderful. So you have automatic payments. So you make your payments automatically. And what are you walking away with? You're walking away with 43% per year free money. And in 5 years, when your house increases, you refinance, you take more out. Because here you go. Here's the thing. If you're making money and you have tax write-offs, well, the profits that you make are offset by your losses. Now you throw a corporation into the mix. So your house is into a trust or corporation, not in your own personal name, because you don't want it in your own personal name. This way you're safe. Number two, you're taking that money, and that's totally separate, and that's in a separate entity also, not in your personal name. In your personal name, you're paying the highest taxes possible. If you put it into a corporation, a trust, or a foundation, you're paying less taxes. Less taxes, more money, better lifestyle. And it is a money game that you got to learn how to play. And you're playing it anyway, you just don't realize it. Okay? The game that you're playing, and I hate saying this to people, it's a losing game. Yeah, you can put it into a trust, Virgil. It's a losing game. You're trading your time for money. Okay? You paying off your house, well, what advantage is that? Why not? Okay, Alibaba, yeah. How do I feel about ASPN? Hold on a second. So I think I'm done with that little rant. But yeah, you need to talk to a tax strategist or a tax planner. Most people spend more time planning a family barbecue than they do planning their financial life. Okay, if you take your finances and you arrange them in a way where you pay the least amount of taxes or no taxes at all, that's up to you. That is your responsibility. Okay, don't think you're doing the American thing by paying taxes, because where do your taxes go? Well, they go to Ukraine. They go to some other country. Do they go to us? No, they don't. Are you going to post this stream? Uh-oh. What was that? Cross scripture. Are you going to post this stream? What will you label it? I'm not going to post, because YouTube already posts it. Okay, so it's posted live to YouTube every single night. So you can go into YouTube and you can see, 2.5 hours tonight, 2.5 hours from last night, 2.5 hours from the night before, so on and so on and so on and so on, all the way back to the beginning of January. Okay, now I say to the beginning of January because that is when somebody taught me how to stand in front of a camera and do this fun stuff, because I'm having fun at this. You got that? Okay. Okay, so Alibaba is not even in this category. Okay? Because I don't think Alibaba has the dividends that we're looking for. BABA. Okay? I love Yahoo Finance. Everything's right at my fingertips. That's a summary for Yahoo Finance. And look at this. Alibaba is 2.36% yield. What the hell good is that? That doesn't even keep up with inflation. I bought 3,000 of KWEN. What the heck is KWEN? All right. Historical data. I want to see how Alibaba has with their dividends. Okay, historical prices. I want to change that to dividends only. That can't be right. So it's going to be a big fat no for Alibaba. They paid 2 dividends. 2. One last year, one this year. Why would I invest in a company that's only have 2? Yeah, no thank you. Oh, I just joined and know this man is onto something. Nylene Rickards, how are you today? All right, so Don Q's Day Done. Okay, Don, let's take a look at Aspen, ASPN. Now, I'm not 100% sure who the heck Aspen is, ASPN. But I do know it's going to be a no. The reason why Aspen is going to be a no, we talked about this several times tonight. Monthly optionable stocks, the numbers just don't work. I'm looking for a safe, predictable, consistent 1% per week. If this is a monthly optionable stock, it means I can only do it once a month. That's once a month, 12 times a year. I didn't go to college. I admit that freely. I am terribly sorry. I have no student debt. Okay? I didn't go to college. But I do know that 52 is better than 12. So I don't do monthlies because the numbers just don't work. He looks like my father-in-law. Well, alrighty then. KWEN. He just said he did, but a couple things of KWEN. Let me get back to that one. Sorry, these questions just keep popping up. All right, Aspen right there. Lang Jam 350. You bought 3,000 of KWEV. KWEV. That's not even a symbol, dude. Oh, KWEB. KWEB. Okay. 25.88. They do have weekly options. Well, let's see how wonderful they are with their dividend payments, because I've never heard of them. Okay, KWEB. Yeah. I'm going to say, oh, hell no. He does the same thing you do. Well, that's cool, I guess. I don't know. All right, so, Lang Jim. I have no idea what the hell you're thinking, dude. Seriously. Because apparently you didn't check the numbers. Look at how profitable they are. 2015, 12 cents. 2015, well, they cut it in half to 6 cents. From 12 cents to 6 cents. That's never a good start. Then it went to 41, 34, 128, 4 cents. 22, 258, 42, 4 cents. How the hell can you in a straight face tell me that that's a good decision? Think about it, okay? If these represent the portion of the profits that go back to the investor, well, it cut in half. This is great right here, from 6 cents to 41. That's awesome. That's a nice increase. But then it goes from 41 to 34. Well, that's a decrease. Then it goes from 34 to 128. Well, that's awesome. But it goes from 128 to 4. Hell no. Sorry. Hell no. All right. Did you say 1% profit per year? No, Pedro, I said 1% profit per week. That's 52% per year. Compounded at 62% year. Do you have other trading strategies for sale? Not on this not on this channel. Sorry. One channel, one strategy. That's it. NUE is over 2% next week. Felix, thank you for that. Thoughts on cash accounts? I love cash accounts. Okay, now, I tell people when you're first starting, use all cash. Don't use a margin. Until you understand what the risk involved in a margin account, yeah, don't do it. You can lose your money really quick if you don't understand it and if you don't know what you're doing. All right, Jerry Young. All right. Nucor, N-U-E, N-U-E. All right, let's check it out. Nucor. Here's our high. Here's our low. Here's where it was. Here's where it is. It's the direction here is going down. What's happening right here the last couple of weeks? I want to take a look at that. But let's take a look at the numbers first. 144. Now, we're looking at the 142. I'm not going to pay attention to this 144. The last trade was 142. So more than likely, it's going to open up somewhere around 143. So the 143s for this week, 145. That's over 1%. Next week, 285. That's 2%. Okay, I'm going to skip this week and go directly to next week if the numbers work on the chart. So the numbers here in the options, they work. So you buy stock and you sell the option. You make it 1% or 2%. All right, great. Well, let's take a look. A year ago, we're at 155.98. We topped out at 203, and that was the beginning of April. Okay, so the bottom was last Wednesday. 30 days ago at 145. We topped out at 152.37. Now that was 3 weeks ago on the 26th of August. From there, she went sideways for a week, drops down. Last Wednesday is the bottom. I absolutely love a 30-day top, drops to a 30-day bottom, and then she starts turning around and going back to the upside. That's what stocks do. They go up, they go down. They go up, they go down. So if you're like me and you watch every single day, you can watch this transpire. Now, I look at 300 companies. That's all I look at personally. Now, you guys have me looking at a whole bunch of stuff. Literally. Let's open up my old book, see, and show you what I'm actually looking at. All right. This is last week. That's, there we go. The week before, not that much. All right, the week before. The week before. Week before. Week before, so on, so forth, on and on. So all the way back to January. This is always back all the way to January 1st. I'm January 2nd. But every single week, you guys have me look at stuff over and over and over again. A lot of them are no. Especially Everzoe. Especially SCHD. That's one of my biggest turds there is. In my humble opinion, I will never buy SCHD. But that's me. And I'll explain to you that in a minute, but let me finish up with NUE first. So, Nucor, what does it normally do this time of year? For that, we look at the seasonality chart. Okay, for those of you not familiar with the seasonality chart, all the way to the left is January 1st, all the way to the right is December 31st. The blue line represents the movements from January 1st all the way to today. That blue dot is today. The red line down here is 10 years worth of data. Average movement over the last 10 years. What does a stock normally do this time of year? That's based on seasonality. Winter, spring, summer, fall. Okay, you have New Year's, Easter, Valentine's Day, Labor Day, Memorial Day, Thanksgiving, Christmas, New Year's. Stocks are directly affected by the time of year and to their proximity to certain holidays. All right. Redneck, thank you for the rose. All right, let's keep on going. How much is 1% a week? Oh, boy. Interesting question. Okay, account number one. The beginning of the year started out with 117,475. Account number two started out the beginning of the year, 100,000 in cash, 100,000 in margin. Account number three started 2 months ago with this 100,000. Okay, 1% of 117 is 1,700 a week. Or let's go all the way back to the beginning, because at the beginning of the year I started to share exactly how much I made. Okay, so week number one, I made 2.12% in this one account. Okay, that's 2,468, 2.12%. Week number 2, I made $1,500, which is 1.3%. Okay, over here, this account, I made $2,990, which is 2.99%. Next week, I made 2.43%, which is 2,500. Okay, 1% is 1%. So when I say 1%, I don't tell people, hey, I made $50,000 this week. Well, great. What did I start with? At $50,000, I better start out with at least $5 million. Because $5 million, 1% of $5 million is 50,000. Okay? Wait a minute. Yeah, 1% of 5 million is 50,000. Okay, I was right. All right, so yeah, so that, hopefully that answers the question. 1 per 100, yep. Hey, Ace, how are you doing? Ace, you going to behave tonight? I hope so. Okay, question. Does the 5 Fed rate point cut drop stock prices more than a 50%? Okay. All right, Aram, it's an interesting question. Okay? Nothing to do with what we're doing here. Okay, let me explain something to you. Okay, the Fed has been cutting and increasing and decreasing and doing a whole bunch of weird crap to our finances since they were in inception in 2000, what is it, 1913. But here's the thing. The stock market's been around for over 400 years. Okay? You have companies that have consistently increased their dividends for more than 50 consecutive years. Okay, whether or not the Fed increases or decreases their rates has nothing to do with the profitability of a company. Coca-Cola's been around for over 120 years. I don't think that rate cut is going to affect Coca-Cola at all. Okay? It maybe affects some companies, but the companies that I look at that are over 100 years old, that have been around for a long time, don't really affect it very much. You are so knowledgeable. Gray, it's not really knowledge, it's called wisdom. And that's something you cannot buy. Something you have to actually live and experience. Knowledge, you can buy that. Wisdom, you cannot. All right, create 1K. Darbin Lee, how are you, dude? What is the difference about the selling put? All right, Darbin Lee, I don't do selling puts on this channel, okay? But it's basically the same thing as covered calls. You put up a chunk of money, you write something against it, you get a rate of return. You're still putting up a chunk of money, and you're still getting a rate of return. Whether it's a call, whether it's a put. Basically the same. If you watch James on YouTube, you can see his chart and option a lot better. Pro tip here. Way to go, knowledgeable. Okay. Museum of Tragedy. Ooh, opinion on what happened with SPY today. I'm going to tell you really quick. Don't care. I don't pay attention to spiders. Really don't. Sorry. What's your prediction now that it hit ATH? I have no idea. Ooh, take a look at that. Ben wants to look at T-Mobile. I haven't had somebody request T-Mobile at all this year. Wait a minute, once. This is the second time somebody's requested T-Mobile. Let's go back to here. Yeah. Unfortunately, Ben, T-Mobile is going to be a no. Not that I dislike it. I like T-Mobile. T-Mobile is on my list. It's just going to be a no for this week because it's at the high of the year. I would wait for it to pull back before I got into it. James, does your camera shoot in panoramic view? Yeah, one of them does. What about micro caps? You got to actually give me a ticker symbol. Now, Ben, I do like T-Mobile, but look, okay, all the way a year ago, down, up, down, up, down, up, down, up. If you really like T-Mobile, keep an eye on it week after week after week. When she pulls back and then turns around, goes back up, yeah, that's when I want to jump in. I do not want to buy at the high. Sorry. That's not a game I want to play. All right, next on the list. You don't have to worry about the stock going to zero. Well, that's nice. Love hitting 10 baggers, so doesn't everyone. But you're in the wrong place. If you like to hit a 10 bagger, you're definitely in the wrong place, George. The only reason I say that is I'm not looking for capital appreciation. I'm looking for cash flow. I don't, and I admit this freely. However much money you think I have, I don't. I cannot take 5, 10, 15, 20,000, put it into something and wait for it to move. Nope, sorry, I don't have that opportunity. Okay? 98% of my money is working every single week. I leave just a little bit aside in case I have to buy something back or make adjustments. Other than that, it's working. All right, George, when you say micro caps, you actually have to give me a ticker symbol to look at. All right, user 22, hello. So once you buy on a Monday or Tuesday, what will happen on Friday? Okay, so with a weekly option, all right, a weekly option has actually all options expire. They do. The difference between a stock and an option is if I buy a stock, it is mine until it either goes bankrupt, belly up, or until I sell it. That's it. An option, it is going to expire. You can water it, you can feed it, you can nurse it, you can put it in the sunshine, anything you want. It's going to expire. Okay? 80% of all options expire worthless. So I want to be an option seller because I don't want to be on the 20% side. I want to be on the 80% side. All right, so I forget where I was going with that. Oh, so here you go. So if I buy the stock on a Monday, sell the option on a Monday, the option is, see this option here, 20 September, that's going to expire this Friday. This option here, 27 September, that's going to expire next Friday. This option here for October, well, that's 2 Fridays away, or 3 Fridays if you want to count this Friday. Okay? They all have an expiration date. All right? So if I buy the stock, I own it until I sell it. Okay? If I sell a covered call against it, if it hits the price, great. I'm back into cash the following week and I find something else. Now, I have 300 companies to look at, so it's not as if I don't have other companies to pick from. So if you take a look at my chart, my calendar, this week here, look what I have. McDonald's, Nike, Halliburton, Schlumberger, SU. Is that Suncor? MOS is, hold on, Mosaic, AM, Newmont, QCOM, Bank of America, General Motors, Kimberly-Clark. That's just for this week. And that's just on this list. I have 7 or 8 different lists, all have looking for something different. I got the Dividend Kings, the Dividend Aristocrats, Dividend Champions, Dividend Contenders. I have a list of companies that are all over 100 years old and consistently increase their dividends. And then I have a list that I've been working on for the past 20 years. Because I've been doing this for 20 years. There's some companies I have been trading for 20 years consecutively because they consistently give me a 1% or more every single week. So why would I look at anything else? I come from a time frame. You know, I grew up in the 60s, 70s, and 80s. If it ain't broke, don't fix it. If it works, leave it the fuck alone. Plain and simple. If it ain't broke, leave it alone. If I'm getting my 1%, why do I want to mess with it? Okay, hopefully that answers that question. You buy on Monday, you sell it right away if you're taking the option. Yeah, basically, yeah. Options become worthless by the end of the week. Not all of them, but for the most part, 80% of all options expire worthless, and they expire on Saturday. Unfortunately, nothing you can do on a Saturday, so the last trade you can do is $3.59 on a Friday afternoon. That's why my live morning trading group, for those of you that are serious about trading and want to actually trade with me, look over my shoulder, ask me questions, me guide you through it, that kind of thing. Yeah, it's $100 a month, and we meet every morning, Monday, Tuesday, Wednesday, Thursday. Friday, we jump in at 3 o'clock. Now, I jump in at 3 o'clock on a Friday because I want to make sure everything I bought on Monday and Tuesday is going to be a perfect setup for the following Monday. Because this is not a set it and forget it. No, I buy it on Monday, it expires on Friday. Then Monday, I do it again. Now, the thing is, I've been doing it for 20 years. I'm just bringing you along for the ride. So if you think I'm here today and going to be gone tomorrow, you're sadly mistaken. Because I've been doing this for 20 years. Someone was stupid enough to say, hey, Jim, stand in front of a camera, do the same thing. Fine, why not? I'm actually helping people out. I'm actually happy to help people out because I have people that, believe it or not, I've been here since January. And there's some people that have been following me every single night since January. It's like, what the hell? don't you guys have anything better to do? And they say, no, I like making 1% a week too. I said, great. All right, so anyway, let's go for some more questions. Yep, what about Google? Google has just recently started paying dividends, so Google is not going to be on my list for another 15 to 18 years. Sorry. Sorry, I meant to say puts. Okay. PLCE, what the heck? Now, if you ever hear me say, what the heck is that? More than likely, it's going to be a no. PLCE. Okay, $17. Let's see how good they are with increasing their dividends. PLCE, because I've never heard of this company. Children's Place, dividends. Okay, cool, cool. All right. Yeah, only 10 years. Okay, now, Daniel, don't get me wrong. Okay, if you like a company that increases their dividends, and only for 10 years, now they can do it consistently, because look at 13, yeah, well, 13, 15, 20, 40, 50, 56. Cool. Nice increases, but wait a second. Wait. Time out. 2019 was the last dividend they paid. Yeah, sorry, dude. It's going to be a no. For a minute there, I thought that was going to be a 10-year company, a good 10-year company. But no, they stopped paying dividends. Sorry, that's a no. For me, anyway. If you like it, more power to you. What should I research for a 6-month investment in buying shares? Felix. I honestly, Felix, you've been here for a while, I think, because Felix is not that popular of a name. I can't tell you because I know absolutely nothing about you. Okay, I don't give people advice. Okay, all I do is I read numbers. I read the numbers and I interpret the charts based on the trading strategy that I like. Okay, wait a second. Hold the phone. Rob, what do you mean interest is no longer deductible on a primary residence? Now, that's something I've never heard that before. Okay, as far as I know, the federal government took away all tax deductions except for 2. Interest on primary residence and business losses. Okay? So I honestly, I can't agree or disagree with that. I've never heard that. All right? Interest is no longer deductible. Okay, thoughts on investing in QQQM. All right, July, I can't give you an answer to that one because I don't know anything about you other than the fact that I don't like the Qs, okay, because they're not consistently profitable, number one. Number two, the rate of return that you're getting is absolutely horrible, in my humble opinion. So you're saying QQQM. QQQM. Okay. Okay, first off, QQQM has only been paying dividends for 4 years. Okay, now you're 22. 4 years may work for you. For me, it doesn't. I like consistency. I like predictability. Now, if a company has been profitable for more than 20 consecutive years, I'd be more apt to put my money into that company. Now, I'm looking for consistency and increased profits. The quickest way to find that is to look how often they increase their dividends, because the dividend is the portion of the profits the company gives to the shareholders. And if you're a shareholder and you only have 4 years worth of dividends, look at this, 21, 16, it's going backwards, 16 to 18 to 17 to 15, that's going down. The 19 to 21 to 25, that's going up. And 25 to 27 to 22 to 38 to 35 to 32. Yeah, it goes up and down. I do not like inconsistency. Okay? You're 22. I'm not sure if you understand what inconsistency means. Okay? Think of it this way. All right, here's something interesting. Over at my mother's house, all right, I walk into the house and I see the door trim next to the bathroom, and it looks dirty. So I want to repaint it. So as I get closer to it, it's not dirt. It's actually pencil marks. Liam, 2020. Liam, 2021. Liam, 2022. Liam. So it's my niece and my nephew on how they've grown over the years. My mother would put little check marks on the frame of the door. And I'm sure a lot of people did that. Okay, so every year it's growing, 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 growing. This company here, well, your profits are going up, they're going down. They're going up, they're going down. They're going up, they're going down. What consistency is that? Is that really where you want to put your money? Why not a company that looks like this? Hold on a second. Now look at these dividends. 31, 36, 39, 42, 46, 51, 56, 62, 68, 75. Consistently going up. There's over 300 companies that have dividends that look like that. Consistently profitable. Okay, so when you invest your money, it is important to dive in deep and look at everything. Other than, hey, it was this price today, now it's at this price. There's a huge difference between that. Where's the consistency? Okay, can somebody check and see if interest on primary residence is still deductible? Because I think it is. Companies that offer dividends aren't good companies. Why the hell would you say that? Coca-Cola has dividends. Ford has dividends. General Motors have dividends. IBM has dividends. Microsoft has dividends. Home Depot, Lowe's, Colgate, Palmolive, Bank of America, AGNC. There's hundreds of, actually there's over 4,500 different companies that pay dividends. Why would you possibly say they're not good companies? When is enough enough? Wasn't that, didn't Charlie Sheen say that to Gordon Gekko in Wall Street? When's enough enough? Enough is never enough. For some people. Me, 1%'s enough for me. Dividend Stock Talk, new to the channel. How can I learn more about what you're saying so it makes sense? Keep coming back. Ask questions. What about Coca-Cola? Coca-Cola's been in business for over 100 years. I really don't see them going anywhere. Uh-oh, I gotta go backwards. I'm missing all these questions. Need to replace the TV. Okay, John, there's a new TV right here. I just haven't installed it yet. I wouldn't recommend paper trading because it's not real money and you won't have your emotions. I understand that, and you're right in one aspect, but with paper trading, it allows you to get comfortable with the process, and it allows you to get comfortable with the trading platform. Okay? And you're right. There are no emotions into it. But you're not losing anything. Okay? So if you lose something, you lose the taste for it and you'll walk away from it and you'll never come back to it. Okay? But if you're doing paper trading, it's kind of like Monopoly. Yeah, you play it for a while and then you want to do the real thing. Okay? At some point, I'd suggest people do paper trading. The reason being is to get comfortable with the trading platform. Get comfortable with the process. To make sure what you think is right is right. Because if it's not right, well then don't do it. But don't put real money into something you have no idea how to do it. Unless you have someone that's going to actually walk you through step by step so that you don't make mistakes. Find a mentor that will actually be there for you to walk you through it step by step by step. But you are right. There are less emotions when it comes to paper trading as it is with real money. Real money hurts when you lose it. When you lose money on paper trading, it's like, damn, I gotta get better at that. But you're right, knowledgeable investor. Yeah, I know, just saying I've been trading for a while. Well, okay. Okay, so if you've been trading for a while, well, that's pretty easy. I mean, you should just jump right in. You should know exactly what you're doing. Gotta love TradingView. I've never seen TradingView, and at this point in my life, I have, and it may be great, really. It might be really great, but I have no desire whatsoever to look at something new. Okay, I come from a time frame where if it ain't broke, don't fix it. Okay, I remember my 256 modem with the dial-up. You know, that weird noises. Yeah, I lived through that crap. As a matter of fact, I loved Windows 95. And it pissed me off that they changed it, and I continued to use Windows 95 all the way up until the point where it wouldn't work anymore. They said, sorry, we don't support that anymore. You got no other option than to upgrade. Pissed me off. Then I went to 98. I didn't like 98 as much as I like 95. And then I went to Windows, whatever. We are where we are now. They keep changing it, and I freaking hate it. That's Thinkorswim. Yes, Virgil, that is Thinkorswim. Okay, Daisy, do you have any good investment groups to share? Investment groups. I do have a Discord, but that's for my morning trading group, and it's not a free service. Sorry. DKNG calls. What the heck is DKNG? I know what DKNG. What the heck is DKNG? DKNG. DraftKings. Yeah, no. Sorry, dude. They haven't been around for 20 years. That's going to be a no. The seasonality chart is very clear. Okay. What time does Powell talk tomorrow? No idea. Don't really care. What covered calls are you looking at for this week? Oh, Tanner, that's a good question. Well, let's take a look at them. Albemarle, Ford, Kohl's, MPW, Walgreens, and Wynn in that account. Marathon, Walgreens, Halliburton, Kohl's, CVS, Riot, and Riley. And Macy's, Mara, MPW, and Riot. Those are the only 3 accounts I share with you guys. I got 6 accounts, and I'm not sharing those with you. Occidental Petroleum. Ooh, I like that one. OXY. OXY. Now, as always, very first thing I want to see, the high, the low, where was it, where is it, what direction is it going? Look at this bounce off the bottom. I love a nice bounce off the bottom. 52.06, the 52s are going for 58 for this week. Okay, that's over 1%. Next week, $1.01. So I'd be more apt to go for next week and get the 2% for next week and just ignoring this week. But that's me. But let's take a look at the numbers. A year ago, we're at 66. We topped out at 71.28. The bottom of the year. Not the bottom of the 30-day. Well, it is the bottom of the 30-day period. It's also the bottom of the 90-day period. And it's also the bottom of the 30-day period. Right here. Okay? That was on Wednesday. Thursday up. Friday up. Monday up. Tuesday up. Well, when you make money in the stock market, you buy low and sell high. Well, it's not just the 30-day bottom. It's the bottom of the year. You're not going to get any lower than the bottom of the year, and that was 5 days ago. Great. Now, it's not a suggestion to buy it. I'm just saying. Okay, you make money buying low and selling high. Not buying high and waiting for it to go higher. And it all depends on what you're looking for. You want capital appreciation? Fine. Find a strategy that concentrates on capital appreciation. If you want cash flow, find a trading strategy that concentrates on cash flow. Well, this trading strategy here, buy when it comes to a bottom, buy it at the money, sell at the money, collect a premium. That premium's over 1%. Great. There's over 300 stocks that actually fit this parameters. Okay, fine. So I like Occidental Petroleum. That's a good choice there, Mac. AGNC. Deglasius. Okay, AGNC. AGNC. Okay, that's going to be a no for this week. Now, I like AGNC. It is on my list. I do take a look at it often. However, it's currently at the high of the year, and I don't buy at the high of the year, regardless of what the numbers tell me. Sorry. I wait for it to take its profits, come down, and then I will buy it. What is the link for the YouTube channel? All right, user 221682, the top left-hand corner. You see it right there? See my pretty little face in the top left-hand corner? It says Dividend Stock Talk. Yeah, if you click on that, that'll take you to my bio. My bio will take you to The 10-Minute Trader, which is my website. Now, on The 10-Minute Trader, okay, this is The 10-Minute Trader right here. Okay, The 10-Minute Trader. Simple, safe, predictable, 1% per week, live nightly training, 9 p.m. Eastern Standard Time. Well, that's what we're doing right now. All right, slide down a little bit. What does that say? Look at that. If you're looking to strike it rich overnight, this ain't it. My main focus is a simple, safe, predictable, and consistent 1% per week. That's over 50% per year. Slide down a little bit better, a little bit more. Investing your own money shouldn't be difficult. Stop making it more complicated than it needs to be. And then you have here, live trading. That's where you can join my morning trading group. This here will give you more information. Was it a PDF file that gives you the outline of the whole strategy? And then you come down here further, view all, click on that, and then it comes up to, there you go, my social media. YouTube, Twitter, Facebook, Instagram, podcast, LinkedIn, Patreon, and Books by James. Yes, Books by James. James has written 14 books. All right. Anyway, below that, you'll find all my trades for the year. Okay, they're all posted right there. I don't hide anything. Click on any one of them. Tells you what the trades are. Look at this. MPW, Siri, General Electric, Newmont. Yeah, Newmont. Walgreens, CVS, MPW. They're all there. Every single trade I made this year in these 3 particular accounts, I got to say that because I got 6 different accounts, and these 3 particular accounts. So when it expires, you lose your money. Amara, hold that thought, because I really got to. How big numbers do you work on weekly at about 1%? All right. Remember I said I have 6 accounts. 3 I share publicly. The 3 I share, one has 160,000 in it, one has 200 in it, one has 100 in it. Okay? So 1% a week, do the math. At 141,000, well, 1,400 a week. Okay? At 100,000, well, that's 1,000 a week. Okay? The 100,000, well, that's 1,000 a week. Okay, so Mara, when it expires, you lose your money. Absolutely no, not. Okay, so Mara, there are 2 trades going on at all times. One is the stock, is a portion. See, when you buy a stock, you actually buy a portion of the company. You own a part of that company. Nice, you like that, Virgil? You own a part of that company. And by owning a part of that company, especially the ones that I look at, I become entitled to a portion of the company's profits. Okay? That is the stock. The option, that expires. So let's take a look at this example here for a second. AGNC. Okay? AGNC currently is at $10.59. The $10.50 is going for 15 cents, which is over 1%. Okay, the $10.50 for next week is 19 cents, which is almost 2%. Okay, almost 2%. Now, if I buy the stock, I will own the stock until the day I sell it. Okay, I don't lose any money unless I sell it at a loss, which is rule number 2. If you weren't here for rule number 2, rule number 1 is never buy something you don't understand. I know who AGNC is. I have no problem with that. Rule number 2, never sell at a loss. If I buy it at $10.59, ain't no way in hell am I selling it for $10.58, $10.57, $9, $8. It can drop down to $2 a share. I'm not selling it at a loss. That's not what I do. I buy a good quality company. I hold on to it until I can sell it for a profit. So if I buy it at $10.59, I will sell a covered call at $10.50. Now you may think that I'm selling it at a loss, but I'm not. If I buy it at $10.59, I sell it at $10.50, hypothetically I'm losing 9 cents. But no, the 9 cents is coming off of this right here. All right? That's the premium. I collect that premium. So if you add the premium to the strike price, my actual sale price will be $10.69, which is more than what I paid for it. That's my profit. Okay? Never sell for less than what you paid for it. Now, when I sell the strike price, the option, that will expire, but I won't lose my money. Okay? Because there are buyers and there are sellers. Okay? I am an option seller, but before I sell the option, I have to buy the stock first so I have something to sell it against so that it is covered, so that it is a safe trade. It's one of the safest trades out there. It's called a covered call. You buy the stock, you sell the option against it. So if I'm buying it at 10.59 and I'm selling it at 10.50 and I'm collecting 19 cents, am I actually getting 10.69? Okay? I'm making more than 1%, and that is my goal, 1% per week. Simple, safe, predictable, and consistent. And it only takes me 10 or 15 minutes to do so. First thing you got to do is find the stocks. Well, those are easy. Dividend Kings, Dividend Aristocrats, Dividend Champions, Dividend Contenders, Warren Buffett's list. That's over 300 good quality companies that consistently increase their dividends. Why would you put your money into a company that's not consistently profitable? It boggles my mind. How many people come on here every single night? Now, every single night I get between 9 and 20,000 people coming through, giving me questions, giving me answers, telling me to look at stuff. And they give me stocks, and I'm thinking to myself, what the hell are you thinking putting your hard-earned money into something like this? All right, let's keep on going. Brandon Schmidt. I'm buying RR because I have faith in the company for the future, and that may have a dividend. Okay, Brandon, I never tell people not to buy something. I'll question you and saying, what the hell are you thinking? Like, for this example, what the hell are you thinking? Now, I'm making the assumption that you are not retired, okay? That you are looking for capital appreciation, because this thing is at 89 cents. It has no options, okay? And I'm not going to tell you one way or another what you should and should not invest in. If you think this is a good company, hey, more power to you. It's 89 cents a share. Fine, dandy, do it. Not something I would look at. Okay, ET. Yes, Enron. ET does have good dividends. Energy Transfer. The only challenge I have with ET is ET. Here we go. Okay. The only problem I have with ET is they only have 10 years of dividends. That's it. 10 years of dividends. Okay? 21, 23, 25, 27, 29. So they stayed at 29 for a while. That makes me a little uncomfortable. 30, 31, stayed at 31 for a while. And then they cut their dividends in half in 2020. Went from 31 down to 15. 18 to 20 to 23, 27, 31, 32. Okay, so they cut their dividends once, but they're going back and growing again. If you like ET. Okay, now ET, you're saying it has a good dividend. I'm going to disagree because the dividend got cut in half recently, and they've only had dividends for 10 years. But if you like it, more power to you. Energy Transfer is really not that bad of a company. Okay, but I don't like it because it doesn't fit in the parameters. How about GE, General Electric? General Electric is one of those companies you'll find, number one, it's at the high of the year, so it's going to be a no, that it's so old and it's so set in its ways. 180, the 180 is going for 370. Holy shit, that's nice. But I don't buy it at the high. Okay? But usually General Electric, the premiums aren't that great. But in this instance, it is. Because it's trying, when they have high dividends, they're trying to encourage people to buy it, and they have a lot of profits. Well, look at the stock. It's a nice little run up. It's going to have I mean, take a look. Here's the bottom, 160. Now it's at 180. That's a $20 increase. A $20 increase on a $160 stock is around, 14% maybe? That's more than 10%. Skipper Art. Any good ones that pay monthly dividends? Well, yes, a whole bunch of them that pay monthly. Brandon Schmidt, what do you think about Icon Energy? Never heard of them. ICON. Has no options. Dude, what are you doing? Virgil, you got it. Brandon Schmidt. Icon Energy has no options. So what are you thinking? I'm assuming you're thinking capital appreciation because there's no cash flow coming out of this thing. Enron already did Energy Transfer. I wish I had the time every morning and on Friday afternoon, but I have a full-time job. Okay, grateful. Here's my thought on a full-time job. I had a full-time job once, You walk in and you tell your boss or your shift supervisor, hey, I need to take my coffee break at 9:30. At 9:30, the market opens up. That's when you do your trades. It takes 10 to 15 minutes, and you're entitled to a 10 to 15 minute coffee break every 2 hours, I believe it is. Okay, because I was, believe it or not, by looking at me, you can't tell. At one point in time, I was a CEO. Believe it or not, I had 23 employees, or was it 26? 26 employees at one point in time. I did. Now, I'm retired, kick back, relax, don't do a whole hell of a lot of anything. And I do not have as much money as you think I do. My money is not working for me at this point. Grateful, dude, seriously, you got to do something, because eventually, eventually you are going to retire. You are going to get to the point where you walk into work, cable lineman, I have no idea what that is. Okay, grateful, you're going to walk into work one day and your boss is like, whoa, you need to go to HR, dude. And in HR, they're going to say, hey, grateful, time for you to retire. You're going to age out, walk out, or toe tag out, one or the other. It's coming whether you like it or not. Now, you think I actually thought that I'd be here at some point in time? No. My aspiration as a kid was to be a soldier. When I got out of high school, I joined the service. I went right from high school right to the service. I didn't have a summer. My summer was spent in boot camp. I paved the way for the information highway. Yeah, so did I. I was there through it. So, you're going to get there sooner or later. And if your money's not working now, well, when are you going to do it? Now, don't get me wrong, but most people spend more time planning a family barbecue or what do you call it? Hold on. A Super Bowl party. They spend more time planning a barbecue or a Super Bowl party than they do on their personal finances. And guess what? When you're retired, you have that income to rely on and nothing else. Okay? Had I paid more attention when I was younger, you climb telephone poles, way to go. Okay, well, if I paid attention when I was younger, I would have done this a long time ago, but I didn't. Okay? I'm here where I am, and I'm making the most of where I am, making the best of where I am. Uh-oh. It's 11:27. So here you guys, you got 11:28. You guys got 2 minutes to bring the count up to over 200 people, or I'm calling it a night. So if at 11:30 we're over 200, I'll stay longer. But at this moment, we're at 136. We're at 200 a little while ago. Hey, Jim, how do I try your strategy? Simple, Alan. My honest opinion, she's coming back each every day. Sell, sell, sell. Trading places, yeah. That's how we got high-speed cable. Yep, that's right. All right, hold on a second. Cannabis Cam. Okay. Can you explain time frames on receiving dividends? Example, how long do you have to hold them till, all right, cannabis. Let's go back to here for a second. Let's get rid of this. Okay. Now, let's do this right here. Okay, just for the fun of it. You see this right here? This is every single company that has a dividend. Now, it doesn't look like there's any here. But you see that little number there? 61. There's 61 companies that they couldn't fit them all. Here, 51 companies that couldn't fit them all. Here, 104 different companies paying a dividend on this date. They can't fit them all in this tiny little square. 33 here, 114 here, 86 here. So this is just this month. Now remember, each quarter has 3 months. 3 months. So January, February, March, first quarter. Okay, April, May, June, second quarter, July, August, September, third quarter, October, November, December, fourth quarter. Thank you, I wanted to know. Yeah, you got it. So, you get 4 different quarters. Each quarter, company pays. So, this company right here, BDX, the second week of the quarter, will have its dividend. 90 days from now, they'll do it again. 90 days from them, they'll do it again. Every 90 days, they'll have a dividend. So, any one of these companies you can buy before the green dot. The green dot represents the EX date, which is the last day to trade before the dividend is paid. And it also represents the date of record. So if you own the stock on this date, which means you're going to buy it before this date, here, any one of those is before this date, to collect the dividend. So you have 4 dates: announcement date, EX date, date of record, payment date. Okay, that's it. You buy it on the date of record, to buy it for the EX date and date of record. Okay, you collect the dividend, sell it for profit, go to the next one. Buy it, sell it for a profit, go to the next one. Buy it, sell for a profit, go to the next one. It's called dividend capturing. That's in my first book, How to Get 10 to 20 Checks Per Month Like Clockwork. Dividend capturing. Trading strategies over 400 years old. I'm used to getting monthly dividends. Skipper Art, cool for you. I'm used to getting weekly checks. You get monthly, I get weekly. Okay, Alan, I'm going to tell you come back every night until you learn it. It's really not that difficult. I use E-Trade and NFU. I have no idea what NFU is. All right, we got it's past that time. What's a good starting amount? Benjamin, I can't tell you what starting amount's good for anyone. Thoughts on 401ks and Roth? Okay, 401k, you're going to be screwed eventually. Look at the fine print. I mean, the fine print. How to take weekly. Virgil, weekly options. Weekly options, weekly pay. I'm learning too. Boyce Brown, cool. I'll take weekly. Keep coming back. You'll get it. You'll understand. It's not that difficult. I'm here every night. All right, so Tigichi, I have no idea how to pronounce that. 401k, you're going to get ripped off eventually. Roth IRA, yeah, eventually, right at this moment in time, they're non-taxed. But here's the thing. At one point in time, Social Security was not taxed. People who were retired tax-free. Now we're being screwed. Okay? So if you think the government's not going to find a way to tax that money, yeah, you're in sad shape, dude. Seriously. Delusional. Eventually, if they have a way to screw us, they will. You'll see me tomorrow. I'll be here tomorrow. I'm getting ready to sign off. I'm just going to go through these last questions. What's a good starting amount? Ben, I can't tell you that. You have to figure out, because you know what your personal finances are. You do. You know what you want to do. You know what you can do. You know what you can't do. You know what you're comfortable with. You know what your risk factor is. Okay, that's a you question. Okay, my grandson started out with $50. I started out, I think it was 12,000. I started out with decades ago. I'm not looking up any more tonight. I'm just answering questions. Vaughn, Jan, gatekeeper. I'm not gatekeeping anything. Ask me any question you want. Why do I use multiple accounts? That's none of your damn business. I have more than one account. What's wrong with that? Okay, so look at it this way. I have more than one account. So, hypothetically speaking, if I run into an issue and they seize one of my accounts, well, I have a couple other ones to work with. Okay, if you have all your money in one account, if you have all your money in one bank account, if you have one credit card, yeah, you're doing something wrong. You think the powers that be aren't going to try to figure out a way to screw me over? Of course they are. I like to have my risk spread out. What platform do I use for trading? I use Platform Thinkorswim, which is through Charles Schwab, and I also use Robinhood. Thinkorswim. Nelly, I like Nelly. Should pop right. Yep. Lunar stocks and moon. Yeah. Okay. Cool. Lunar stock. Okay, got it. Bid ask price. There are more than that. Yep, probably. VOO Mara. Oh, honey, I wish you asked me earlier about VOO. Hell no to VOO. I should come up with a mantra. Hell no to VOO. Hell no to VOO. The reason why I'm saying hell no to VOO, but quickly, I said I was going to be done, but I feel compelled to share this with you. VOO, number one, look at the dividends all over the place. No consistency whatsoever. Also, only 10 years worth of dividends. That's it, only 10 years. But here's where it gets worse. Are you ready? Because you might not be ready for this one, Mara. You invest in your money, look what you're getting. You're getting 1.28%. You are losing money every year you have your money invested in VOO. Because you cannot tell me and you cannot convince me any way, shape, or form that eggs are not more expensive than they were 5 or 10 years ago. You cannot make me believe that gas is not more expensive than it was 5 or 10 years ago. I don't care if you're talking Trump. I don't care if you're talking Biden. I don't care who you're talking about. Inflation is inflation. Gas cost something last year. Gas cost something 10 years ago. Now it costs this. Okay, the inflation rate is way, way, way more than 1.28. That's what you're gaining with VOO, 1.28% per year. Look what they're up to. They're up to 19%. We're in week number 38. Week 38. Okay, I'm already up over 50% from the beginning of the year. Every single one of my trades are right there, available for you to see anytime you want. Okay? Bitto, Macy's, Kohl's, AEO, MPW. They're all there. Every single trade I make is there. As a matter of fact, let me go way up here. I used to do this every year until the podcast company changed. Okay? I have a podcast. There's over 900 episodes. 900. You can pick any one.
Now, I really don't see whoever bought it from me buying it from me. So I'm just going to bide my time, see how she opens. Where I invest in dividend stocks. Brought to you by the 10-Minute Trader, where I invest in dividend stocks for weekly cash flow. Take you along for the ride that's safe, predictable. Monday was the 30-day buy. Why wouldn't you load up on this at $3.92 on Friday, on last Tuesday?
Okay, so there's over 900 episodes every single day. Now, I've been trading every single day for over 20 years. It's only recently that you are seeing me, because I've been trading for 20 years. In the first 4 or 5 years, I was just trading by myself. And then somebody taught me about YouTube, so then I started doing videos on YouTube. Videos, oldest.
March 29th, 2013. We bought 15 this week and we sold 18. Now, considering there's so many of them that we bought and sold, we're not going to be able to go through all of them in this short little session. However, this is what top.
Okay, so I got videos going way back doing this stuff. But here is the only time you get to see me live, because this wasn't available for me decades ago. But it is available now, and I've only been doing this since January. Okay, so we're below 200, and I always say if we're below 200 at this time of day, we're going to call it quits. So hopefully that's everything. I'm going to go through the last question. CCI, we'll have to take a look at it tomorrow. If you say $100,000 account, what do you recommend position size for each trade? I do 20%. So I do like 5 stocks, 20%, 20%, 20%. But that's totally up to you. That's something you have to figure. ULTA, CCI, cool, cool. Where do you live? I feel like I've seen you in Aspen. Never been to Aspen. Sorry. And I'm in Florida at the moment. I'm what you want to call a snowbird, okay? When it gets hot here, I go north. When it gets cold up north, I come back down here. Okay, my kids live down here. I go up there when it gets too damn hot. All right. People think they will young forever. Come wake up and buy stocks now. Yep, I'm going to agree with you there. Anderson, what's some investing tips what I should do as a 13-year-old? Well, investment tip number 1, education. Okay, that's one thing. Do I have DirecTV? I don't think so. Education is one thing they can never take away from you. Money comes and goes. Friends come and go. The friends you have now, you think they're going to be around 10, 15, 20 years? Nope, they ain't. Okay, I had a lot of friends in elementary school, junior high school, and high school. Okay, I have 4 or 5 close friends that I still in contact with. Now, I go through my Rolodex once a month, and I call everybody. Okay? They say, what's the matter? What's the matter? What's going on? Nothing. I'm just going through all my decks. I'm going through my Rolodex telling you I'm still here. Still alive. Oh, okay. People are always thinking I'm calling for a reason. No, I'm just calling to let you know I'm still alive and just see what's going on in your life. At 13, you got a long way to go. The friends you have now aren't going to be your friends in high school. When you get out of high school, The friends you have in college, well, they're not going to be your friends when you're 20, when you're in your 40s and 50s. You're going to have 4 or 5 close friends that will follow you for the rest of your life. Everybody else in your life, they're going to come and they're going to go. So at 13, education is the most important thing you can invest in. Okay? And then if you have money, find something that you believe in and invest in that if everything looks good. Remember, you're 13 at the moment. You got a long way to go. Don't be in a hurry. Stock market's been around for over 400 years. It's going to be here long after I'm gone. You have to buy stocks because all the young people will have no retirement. Class X, I have no idea what you mean by that. All right. Can you look up CCI? We'll look at CCI tomorrow. Forget it. You are over in Florida or New York. Okay. Sorry. CCI has monthly options. Oh, I missed some. I missed some questions. How do I find companies pay weekly dividends? No one does. Sorry. Tell me about tomorrow. Well, tomorrow is Thursday, and tomorrow we'll be starting at 9 p.m. Eastern Standard Time. Apple, love Apple. We actually bought some Apple this week. What platform was that? That's Thinkorswim. Saul, you broke. Sorry about that. Thank you so much sharing. Have a good night. You have a great night. Amy, how are you? 86. Night. Catch you later. What's the portfolio now? You have to check in later to find that one out. When you sell a stock, what do you put your profits into? Huh. Okay, home surgeon. I don't. I use my profits to pay my bills. I'm retired. This is my source of income. Okay, at some point, you're a surgeon, so you should be set, hypothetically speaking. But I have a chunk of change. Okay, I invest that chunk of change. It gives me 1% per week. That 1% per week pays for my bills. Okay, expose. Yeah, somebody in the audience was actually 13. Spider tomorrow. I don't do spiders at all. I'm glad you're here. Thank you so much. Hello from Jennifer. You're back again. Jennifer, nice to see you again. Desmond Campbell, you're new here. You mean no Social Security? Yeah, my Social Security at this moment in time is going to be somewhere around $250 a month. Yeah, I checked it. You know, being self-employed, it's a little bit different. How about some land and cows? Ooh, I don't mind getting some land and cows. Monthly, though. Tomorrow is Wednesday. Yep. All right. WTF. I have no idea what stock that is. Anyway, we're below 100. Holy cow. It's 11:45. I'm going to turn into a pumpkin. You guys have a great day. Again, this is James from Dividend Stock Talk, brought to you by the 10-Minute Trader, where I invest in dividend stocks for weekly cash flow, take you along for a ride for a safe, predictable, and consistent 1% per week. You guys have a great night, and I'll see you again tomorrow, because the sun will come out tomorrow, wipe away the cobwebs and the sorrow.